discussing a little bit about Trade's 2021's high probability income generator. My name is Don Kaufman, and this is a TheoTrade presentation. There's a risk disclosure. We're not financial advisors nor a broker dealer. And the reason I always put that in there, I spent actually 15 years in the brokerage world prior to TheoTrade. I'll discuss that here momentarily. All right, let's get down to business. This is why you're here. Okay, and by the way, where is here? A moment ago, I actually asked where everybody was joining us from. If you're just tuning in right now, feel free to kind of chat in where you are joining us from around the country or around the world for that matter, because I'm always a little bit curious here. We were and have been based in Scottsdale, Arizona. We picked up and we actually moved to St. Croix in the U.S. Virgin Islands. That's where I'm actually broadcasting from currently. We'll still spend a couple months out of the year back in Arizona, but everybody's like, why St. Croix? So we live in a community that's actually filled with traders. In fact, my next door neighbor is a trader, 2 doors over is a trader. And what you're actually looking at here, this used to be the office of a fairly famous hedge fund manager. Used to manage over $10 billion out of this, and then they actually turned it into their gym. So we just purchased the property, and we're now converting it back to our trading office here in St. Croix. But when I say there's a few traders in here, not being facetious, it's about 30 homes in this particular community, of which 10 of them are owned either by hedge funds and or traders. So pretty substantial financial presence down here in St. Croix. So this is why you guys are here today. So we're going to discover why ultimate trades are ideal for the current market environment, so you can potentially generate monthly income. All right, you're going to learn the trading symbol professionals use on a daily basis to create ultimate trade. So there's some real specifics that I'm going to cover here. One of them is a symbol that I'm going to give you here momentarily. You're going to learn how and where to find edge as a retail trader, and that's also a critical aspect. You know, you start talking about edge. Yes, we're going to use some terminology today that you may or may not be familiar with. One of the terms that most people are not familiar with is the term Ultima. I have no idea what Ultima stands for, and we'll get to that momentarily, along with what Ultima is and how to use it to gain edge. Reap benefits of high probability trades while learning little known secrets, okay, to not taking large losses. We'll talk a little bit about hedging, and then of course find products that make find some of the products that make the most viable candidates, and which candidates and products are going to be a recipe for disaster. Huh? I think everybody loves the like moth to the flame, the products that of course can cause a little bit of disaster. So stick with me here. We're going to probably be about the next 90 minutes. That right with everybody, and we'll jump into this. All right. One of the first things I will mention an indicator a couple of times throughout the course of today's session, and I just want to elaborate upon it right now. And it's actually called auto expected move. In fact, you can use it on things like Apple here and Facebook, and I'll show you what it is momentarily, but I'll talk about it for a second. It is actually the single most advanced indicator that we've ever compiled here, not only at TheoTrade, but really that's ever been compiled for a script in terms of think or swim. Anyway, this is an indicator, and we're going to give it to you. It's an indicator that's literally changed the way that we view the markets. It's a $500 value. Stay with me to the end of the webcast. The auto expected move is something I use continuously. Any video that you've ever seen with TheoTrade probably alludes to expected move, discusses the expected move in some way, shape, or form, implies the use of expected move. So the expected move indicator, as I use it constantly, it's just part of our trading. And we believe that everybody, like we don't do we don't do sessions and say like, here's an indicator and then pull it away. We're going to give you the auto expected move indicator. Again, it's ranges, and these ranges are derived from an options chain. I said the O word, okay? And what you're actually looking at, in fact, you know what, I'll just cruise right over to the live trading application because it just doesn't do it justice otherwise. Let me come over here. This happens to be none other than, and I hope everybody can see the screen all right. And by the way, when I'm broadcasting like this, if you see me looking at the camera and I'm looking at this screen, I'm looking at this screen, I'm looking at, you can't see, but I have screens pretty much all around me. So the screen I'm broadcasting on is right here, okay? But the camera's up there, which is it's fine. What I want you to see here in the XLF, right? The options, right? The options marketplace depicted risk, all right, to be what? Okay. And when I say depicted risk, option markets depicted risk to be right there, meaning that it was implying that the financials, the XLF, could get to this particular level. It hit exactly that level and pulled back off of it. And this is not about support and resistance. This is the options marketplace kind of depicting how far the stock is supposed to move. And it's incredibly, incredibly insightful. And we use it constantly. So we'll give you that towards the end of the webcast. But I'm telling you right now, you stick with me right to the end of the webcast, and we will provide that particular link for you. A little housekeeping item over here. One of the first things that I always say whenever I do this, listen, we're going to challenge you guys a little bit today. You all right with that? This is a skill set. You need to pay attention during some of the course material that I'm going to cover here. So I implore you, shut the door, turn off Skype chat. I know some of you probably are working right now at the same time as actually watching this. Yeah, you should just stop that. Just shut down the work completely, right? Turn off Skype chat, whatever. Get rid of Facebook completely. You don't even close it. Phone on silent mode. Definitely kick out the kids, okay? The grandkids, the dog can stay. Listen, you took the time to be here. Focus on being here. So here's a little bit about me. One of the first things I'll tell you, if you ever need to get a hold of me after today, just down here, we use a common inbox, support@theotrade.com. That goes actually directly to our entire group. Put Don in the heading, and that email will get to me. And I tell this to everybody because we encourage people to email us. It's important to us. So, little background on me. I watched order flow for 15 years, and that's very in large part kind of what brought me here. Listen, when I say order flow, I watch trades. I'll explain that in a moment. I actually grew up around trading. People always ask, when did you learn about trading? I grew up around it. I had an uncle that was a market maker. They started a very successful trading firm. If you're from the Midwest or Chicago, the firm's name was called O'Connor and Associates, and he started it in the mid 70s. He exited the firm in the 90s, several $billion deal, and they actually sold O'Connor and Associates over to the Swiss bank, which eventually became UBS. And the driving force behind that was actually this little firm that was not well known out of Chicago called O'Connor and Associates. So right out of college, about 3 weeks out of college, I got involved in markets. I didn't do a degree in finance. I did a degree in molecular genetics. You want fries with that? I went to work in Chicago 3 weeks out of college. A few years after that, I was invited to a startup brokerage firm. That brokerage firm had the strangest name ever. Everybody made fun of us. They're like, sink or swim, sink or swim. Yeah, well, that brokerage firm, I was actually employee number 13, and I went on to the executive team to help take the company public in 2007. I was there when we were acquired by TD Ameritrade in 2009, and I actually had approximately a 5-year lockup. And people always ask, like, why'd you only stay to 2015? Because I had a 5-year lockup clause. It was actually a really good deal for me. So I left in 2015. And 2016, the day that the competition clause was free and clear, we launched TheoTrade, and that's a little background. In fact, there are many people working here at TheoTrade that come from original Thinkorswim, some from TD Ameritrade. So in that time when I was at Thinkorswim and TD Ameritrade, I built their entire education division. So we took Thinkorswim from nothing, built an entire education division. Then we actually went on to actually run TD Ameritrade. And at the time I was at TD Ameritrade, there were 7 million clients we were directly responsible for. So people always ask, okay, so what's watching order flow? Running the education division of a brokerage firm, they gave us access to everything. So what we used to do is we used to actually study clients and client order flow. That means your trades. We wouldn't look at your account and be like, so what's John doing today? Like it wasn't quite that malicious. I might be accused of that from time to time. It wasn't quite that malicious. We actually used big data. So we would look at these giant subsets, for instance, of 200,000 accounts. We knew everything, and we still do. When I say we knew everything, you say like, hey, how many times have you traded an iron condor in the last year? And if you traded an iron condor over 15 times in and out over the last year, we want to know, have you actually seen degrees of profitability on this? We looked at spreads, we looked at irons, we looked at covered calls. You name a strategy, I can tell you everything about it. And a lot of what you're going to learn here at TheoTrade comes, okay, from literally have watched, billions and others' mistakes. But it's about watching order flow for the last 15, years. And it's a big portion of not only my background, but we'll discuss a little bit later. We have Blake Young and Jeff Bierman and Brandon Chapman, all who actually come from the education division of Thinkorswim and TD Ameritrade with us. So this is me. I do some media appearances from time to time. That's actually the last time I was in Chicago. It's been a really long time since I've been in Chicago. That's in studio at, of course, none other than TD Ameritrade. There's a couple CNBC broadcasts that I've done over the years. Obviously, the most memorable because they pitted myself against Kevin O'Leary. Okay, and I was right. Short sellers take a bite out of Apple. I was the short seller. I was the short, he was the long. It was a battle, a duel to the death. Let's get to work. What are Ultima trades? All right, in the onset of COVID, we've seen considerably more volatility. I think that's easy enough to say that, right? We don't have to, prove the point. You can just go into the volatility index, the VIX, and you can see that. But what people do not recognize about the changes in the marketplace, and again, this is only much more recent, the changes in the marketplace. When I say changes in the marketplace, we've actually got changes, not just in high volatility or low volatility. People try to simplify things so much. They go, let's look at the VIX. The VIX is kind of like my predecessor's volatility index. I know that some of you are kind of still new to the VIX. It's the S&P 500 volatility index, but I don't look at the VIX that much anymore. I know, because it's like my predecessor's like volatility indicator. So we look at the volatility of the volatility, and even more appropriately, and this is going to just blow your mind for a second, the volatility of the volatility. What is that? It's the volatility of the volatility index. It's called the VVIX or VVIX. Take a look at it sometime. Like, what is that? Whoops, wrong brokerage platform. Well, that's the right one or the wrong one, whatever you want to call it. So we're going to go to the VVIX, the volatility index. And the VIX of the VIX has been wildly high. In fact, anything north of 110, it's like, get under your desk and duck and cover, because it's serious, man. It's on when the VVIX is above 110. That's not what we're here to talk about today, okay? We actually look at options implied volatility. Skew is also at historically high levels. Now, for those of you that have never looked at that, let's pull that little monkey up. It's called skew. And if you pull up skew, it's going to be a bunch of dots on a screen. So pull up like a weekly chart. What I want to show you here, just real quick, skew, S-K-E-W, skew, skew, record high. Okay, so now we're really starting to geek out on you, because people always ask me, like, well, what's Ultima? It's the volatility of the volatility of the volatility, but it's a change in skew that has really started to make Ultima trades the most viable. And the change in skew, I watched it, and it was not immediately at the onset of COVID. I watched the change in skew, but the change in skew has been rather dramatic over the last 6 months. And not only is it here to stay, and I'm actually going to show you that, but it's actually grown quite considerably, and it's providing incredible edge. The way to actually explain it: options implied volatility skews at historically high, volatility, the volatility remains at record highs, which is Ultima skewness. Okay, and I'll start here on today. And again, this is where things are going to get a little bit heavy. Is that all right with everybody? So just kind of bear with me as again, I'm drawn on the screen from a weird angle, but this is what we call a normal distribution curve. Everybody familiar with it? Okay. Normal distribution curve. By the way, somebody said, how long is this thing here to stay? Yeah, I'm going to cover that in a second, because that's a great question. This is a normal distribution curve. Almost everything that you do in your life can fit into one of these little things, right? And I always use this analogy, but there's really, really good drivers, and there's really, really bad drivers. And that means most of us fit into the meat of the curve, okay? But there's kind of this belief that, oh, no, man, no, there's no good drivers. I live in Los Angeles. No, if you live in Los Angeles, your curve is skewed, because if everybody's a bad driver, okay, then what? They skew the curve. right? And if everybody's a good driver, they would skew the curve. Nobody lives in a town like that anyway. Maybe in something like Montana, right? Where there's nobody on the road. So what you're seeing right now, in markets is just wicked amounts of skew. And this is where we start to talk about, and again, I don't want to geek out on you, but they talk about like skew and kurtosis and, leptotic, curves and so forth, but who cares about any of that? The bottom line is this: there is a tweak in the distribution curve of markets right now, and it is providing incredible edge for those that know how to go after it. And they're going after it. So how can we use skew to our advantage? So skew provides edge in the sale of out of the money options. Skew provides edge in the sale of out of the money options. Oh, you said options. I heard it. So that's actually the second or third time I've said it. It's the O word. All right. How many people here have traded some options before? Okay. Anybody? It's okay. Admitting it is the first step today, people. So how many people here actually use that? Okay. So for those of you that trade some options, this is going to make a lot more sense. If you don't, and you're brand new, fantastic. Because I'm going to tell you right now, we're going to take some of the basics. We're going to take some of the extreme today. And in that respect, when I say that is, for those of you that are a little bit more advanced, I want you to be able to grab, really like some of the nuts and bolts behind it. If you're brand new though today, if you're brand new, I just need you to grab big, broad strokes of logic. So do not feel, okay, out of place if you've never traded an option before. We're not doing any type of butterfly, nothing of the sort. I think you guys will actually be surprised because this is quite the little tweak on what we have done ever, right? Many traders are currently buying options. The retail world is all over the buy side of options right now. I mean, what do you think caused like stuff like GameStop? But they're not buying the stock. Okay. Some kid that's on a Reddit board living in, mom's basement, Mom, Meatloaf, is not out there buying stock. They're using options. Options have actually driven markets to extremes. I mean, you name a product, and I'll tell you right now, Tesla, driven by options. All right. And they're what they call the great gamma squeezes, but neither here nor there. Options buying is what is tweaking this. Okay. And it's also totally beneficial right now to be a premium seller. If you know what you're doing, to be a premium seller. Let me show you what's going on right now, just to highlight this, because you're like, oh, whatever, man. So what? Some kids are on a Reddit board and they're learning to trade options. And just bear with me. This is March of 2020. And that's the end of month average. See right there? We were at 30 million option contracts. Now, 30 million option contracts at the March of 2020. That was during the crash. That was rocking. Everybody was home in March. I mean, that's when they shut everything down last year. That was rocking volume. You kidding? Look at the volume now. I just picked a random day. There you go, March 4th. Oh, almost 55 million contracts have actually traded. It's insane. Retail traders have just gone wild. You are sitting in the epitome right now of the biggest retail boom. Forget about stock. Nobody's trading it right now. They're all trading options. Okay. If you told me, again, it's been 15 years in the brokerage world. If you told me that I would ever see 55 million contracts trading a day, I would tell you you're totally nuts. That was only 5-6 years ago. I'm dead serious about that too. When I was in the business, we'd be lucky to do 20 million a day. Okay, I could see that. All right, maybe in the craziest day, 40 million contracts. That's not even a crazy day. It's 55 million contracts. We've now had days up to 63 million contracts. You can't even like fathom what that does, because that many contracts, that's going to move the entire market. It is moving the market. The options market, okay, is literally the cart leading the horse. We're going to actually learn to sell those options. Why? Because the skew, it's tweaked right now. Many of you have heard through the grapevine, okay, selling options is a way to make money. Honestly, though, how many people have actually heard that? Okay, how many people have heard that selling options is a way to make money? It's kind of the grapevine kind of talk, because most of the time, when you think about the progression of people learning options, they never learn initially to sell options. They always come into this business the same way. Everybody's like, I'm going to buy me some calls. I go, why do you buy calls? You go, I buy calls because I think the stock's going to go up. I go, so instead of actually buying the stock, you're going to buy calls. They go, yes. Okay. How many are you going to buy? They go, I don't know. And I'm like, oh, wow, it's a lot of risk. Buying options in a lot of cases is a huge amount of risk. And most people, they don't get that. And I'm not telling you that because I want you to be an option premium seller. I'm telling you that because, people don't realize the reality of the buy side of options. They're lower probability trades and it's a huge amount of risk. Now, let's talk a little bit about selling because that's what we're actually here today. Okay. We're going to talk about Ultima trades. Okay. Ultima premium, Ultima selling, okay, into an allocation. You're going to learn a little bit about sell side of options. If you've experimented with selling options, you know full well that they have what? Risk. Because what happens to people, all right, is they get all caught up in selling options. And for those of you that have sold options, let me ask you, okay, who here has sold options, made money, taking a big loss? Come on, let's just put it on the table because we're going to talk about it again later. You make money, make money, big loss. You're like, oh man. Okay. This is a painful lesson. Listen, today's session, I'm just going to separate myth from real risk, fact versus fiction, and we're going to talk about selling options premium. Okay. And don't freak out on me over here. Now I say, don't panic. You can do this. As soon as I start talking about options, some people are like, earmuffs. And then others just, they're like, okay, I get it. I'm going to scare you here in a second. You may know nothing about options, and that's okay for today's session. Newsflash. Selling premium can be done in incredibly small accounts now, under 5,000. In fact, you can do, okay, full, and I just want to make this clear right now, okay? You can actually trade any option strategy you want, even naked. You can sell calls naked. You can sell puts naked. You can do it in an IRA, and you can do it with $2,000 in the account. You just have to know how to do it and how to do it correctly. All right. For starters, let's not talk about margin. Let's not talk about retirement accounts, but you absolutely can sell anything naked you want. Not at every brokerage firm, though. Okay. The rules, people, have changed in this business substantially. It's why another big portion of why we're doing this. Big concepts regarding probability and risk. So let's dive in. All right. Okay, first of all, there's many facets of selling premium. If you guys have ever heard about selling premium can be referred to in so many different ways. Selling premium can be talked about well, I'm selling premium. You'll always hear me, listen, been around the industry literally my whole life. People always ask, again, where did you learn to trade options? I have no idea. I mean, I remember literally sitting around the dinner table would be like, so those puts were deep in the money. And I'm like, yeah, puts, money. I had no idea what was going on. Probably about 15 or 16, I started listening a little bit more carefully. By the time I was in college, and I'm like, how do they have money, so much money? And then, 3 weeks out of college, I got a phone call and I'm like, yeah, I'm on a plane, man. And here we are, yada, 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 22 years later. And I'm still talking about the same thing, selling premium, because I grew up around this. I use these terms interchangeably. Selling premium, credit spreads, that's selling premium. Short call and short put spreads, that's selling premium. Delta neutral trading. Delta neutral trading can imply a lot, but it's often selling premium. And then selling naked. It's as out there as it sounds. Selling premium can be used, though, to create bullish and or bearish positions, but are generally considered market neutral. I'm not going to sit here today and preach to you about a MACD and a Fibonacci and a Bollinger Band, because you're just not going to need it for what we're going to talk about. Probability and profitability. Your trading is based on probability. Okay. And I want to get that out of the way right up front. Your trading is based on probability. And the reason that I have this particular slide in there, and I'm just really just going to hammer this home. You can go on to a million different sites and they'll say come follow us. What do they say? I am right 90% of the time. I'm like, oh, okay, but I can create trades and you can create trades all day long. You'd be right 90% of the time and you could still lose money. Never confuse probability, okay, with profitability. Do not ever twist the two. So if somebody comes, and by the way, every single day, okay, we have a lot of clients here at TheoTrade, over 6,000 clients at TheoTrade, but every single day, someone emails in and they say, hey, Don, okay, basically they ask, how often you're right? What's the probability of success in the trades? We go like, yeah, I can give you 90%, but I don't just send them back and like, I'm right 90%. Let me see the proof. Okay, we'll send you the trades. Okay, but I'm right 90% of the time. Let me tell you right now, a monkey can be right 90% of the time. Want to see? Let's be right 90% of the time. So we're going to actually come in here and we're going to go, you guys pick the symbol. What do you want to trade? Make it liquid. You give me a symbol and I'll tell you you're going to be right 90% of the time. I'm making it cooler off the side of the, I'm out of the camera angle right now. Okay. He's leaving. You guys tell me, what do you want to trade? Okay. Oh, of course, Tesla. NVIDIA. I have positions in NVIDIA. How exciting. You know what? Yeah, we can use Apple. I don't care. We can use Apple. Apple works. I've heard of that company before. I have positions in there too. So look, don't look now. He's short 400 shares of Apple. Ooh, I don't care who you are. That has got to hurt. I'm short 400 shares with the stock up $5. Okay. It's a big portion of these sessions. I show everything. I don't care. Profit, loss, in between. So you go out and you want to create a trade that has 90% probability. Let's just open up 30-day options, open them all up. There's a column over here. You ready? Options, theoreticals, and Greeks, and it's called probability out of the money. By the way, here on Thinkorswim, one of the many jobs I had, wore a lot of hats at Thinkorswim, I helped build a lot of the calculations, including probability in the money, probability out of the money, the expected move, how we derive volatility. So I am intimately familiar with these calculations. So you want to create a 90% probability trade. Just look at probability out of the money, go to 90%. Let's just use this one. Okay. Ooh, it's a funky strike here. That says 87%, but it's trading for about $1. If you sell that option, you have a 90% probability. Yay! That doesn't do anything for you. Doesn't do anything for you because what's going to happen? Markets are a trade-off. Markets are always a series of trade-offs. Higher probability, higher risk. Higher probability, higher risk. You can be right 90% of the time and still lose money. And I implore you to understand that very simple concept. So where can you find edge? I mean, that's what everybody's here for, correct? Okay. Because now we're going to start to show you stuff that is much more important. Now we're actually going to show some really specific trade examples. Okay. By the way, I'm actually taking notes right now of everybody in my head that put in some symbols, and we'll cover some of those symbols in here. So let's discover probability and premium selling tactics. Now, for the first example here, okay, just hang with me. The very first example, okay, all I'm going to do is explain a little bit about the basics of options. And I'm not, by the way, I'm not going to talk about this is a call, this is a put. We're going to explain some of the basis, okay, of selling options premium. And in this first example, and please forgive me for even elaborating on this, we're not just going to sell it. We're going to sell it naked. Yeah, now we're talking. Here, let's just do a quick example. So here is a $50 stock. I don't care what stock it is. Okay, it doesn't matter. For this example, we're going to call every stock, by the way, every stock that I like to use has one name, and my fictitious name is stock. And stock is trading right at $50. Now, we do not own the stock. We don't own the stock. We never had anything to do with the stock. We never even wanted to own the stock. What did I do? I go out there and I'm going to have fun with this. I'm just going to sell. You ready? I'm going to sell a 60 call. I'm going to sell a 60 call. Time out. Okay. Sell a 60 call. And because you sold the 60 call, you're going to collect a credit. Let's make that credit exactly, let's just make it $1. Let's make it as easy as can be. And again, this is the first example. And I'm going to do this example, here on the computer screen and in the the PowerPoint. Then we're going on the live market and going to sell some stuff. If that's okay with you guys. So we're going to sell something for $1. So you sell the 60 call. So we sell, okay, a 60 call. And in doing so, we collect a $1, and that's actually what we call the credit. Now, a couple of odds and ends we have to be aware of. Number one, Don, how did you sell something you never even owned? I sold a 60 call. How do you sell it? Okay, first of all, if you've never traded an option before, in options, there are buyers and there are sellers. Okay, and you can absolutely sell yourself into a position. You can open the position by selling something. You can open the position by buying something. Because in options, we have what? Rights and obligations. If you bought the 60 call, maybe somebody buys the 60 call. Stock right now is trading where? 50. If you have a $50 stock and you buy a 60 call, you want that stock to go where? Up and up huge. Because what could happen? The stock could jump from 50, could jump to 100. It could be the next Tesla. I don't know. Okay. But we're not out there buying the 60 call. Buying the 60 call gives you the right to buy the stock at 60. Buying the 60 call gives you the right to buy the stock at 60. But selling the 60 call obligates you to give somebody stock at 60. You go, but Don, I don't own any stock. So if you don't own any stock, what happens to you? This is where things get fun. These are not rhetorical questions, people. Jump in here at any time. So seriously, if you sell a 60 call and you sell it naked, okay? You sell a 60 call and sell it naked. What are you going to do? What are you going to do if the stock runs up? Okay. And I love what somebody said. Okay. You need to look at charts for this. No, you don't. Absolutely unequivocally not. You need to look at skew for this, but that's about it. Okay. So what would happen in this particular case? You could be in trouble, and you could be in trouble in a hurry, because if you just sold the 60 call, well, first and foremost, the stock could stay where? Flat. If the stock stays flat, what do? You keep your dollar. If the stock goes anywhere down, you keep your dollar. If the stock goes up, you're like, it's at 55, I'm getting scared, hold me. If it gets up to 55, you're getting a little nervous over here. If the stock goes to 60, you're like, mommy. And you know what? And then the stock jumps up to 100, you're like, it's over, baby, it's over. Listen, if the stock goes to 100, well, you gave somebody the right to take stock from you at 60, and now the stock's trading at 100. You're going to have to buy the stock at 100 to give them the stock at 60. Oh, but still, my heart, you're going to lose $40. Okay, $40. So you're going to lose $40 minus the dollar you initially collected. So you're really only going to lose 39. But I wanted to give you that example. Now, time out for just a second. What's the probability in that trade? Okay, what's the probability in that trade? And I want you to think about this purely from a probability point of view. So, okay, you go out here and you sell, all right, the 60 call, and you sell it for exactly $1. What's the probability embedded in that trade? Okay, well, you know a couple things. It's fairly high. How do you know it's high? Because if we stay flat, you make money. If we go down, you make money. Go down here, you make money. If you come up here, you make money here. I mean, you make money in almost every single instance. You just have to worry about if we get above what? Above 60. The cool thing is about this, okay, selling a call and selling it naked, you know, a lot of people look at this and they go, oh, that's not that bad. I mean, listen, in options are always good for a period of time. Okay. In this particular case, maybe this option was only good for 1 month. And if it's good for 1 month, all I had to do was sit there, okay, and sweat, beating down, okay, my face. The sweat, by the way, I can see, like, I'm on camera here and it's getting dark outside. It's pouring rain. Hey, that's the upside of actually living in a tropical environment. It's just pouring rain over here. There we go. Okay. We have lighting. Imagine that. Anyway, you sit there and you stress for 1 month, and then it's all over. Okay. All I want you to understand at this point in time is the concept that anybody and everybody can go out and immediately generate trades that have this kind of probability. So here's Apple, and you can go out for 1 month. Now, have no fear. Somebody's initially going to talk about margin. Don't you worry about margin. Margin is very much not an issue at this point in time. Okay, there's a lot of ways now in the marketplace, and the right product selection, you're not going to have margin and margin related issues. So the point that I'm trying to make over here in the very first example, okay, in discovering probability and premium selling, is all I want you to understand is you can sell a 60 call, right? You can sell a 60 call and you can sell it naked. And this is where things start to get interesting. Let's move off Apple and go to something like Twitter. And the reason I want to cover Twitter, okay, happens to be none other than, let's actually flip this to implied vol. Twitter happens to be about a $67 product stock, right? And Twitter, okay, Twitter is an interesting little monkey because it definitely would fit some of the criteria for ultimate trades. Without going into incredible detail, has a lot to do with the implied volatility in here, a lot to do with it. Okay. And case in point, right, you can create trades all day long in something like Twitter that would have an excess of 90% probability, yet would still also provide you incredibly, incredibly large amounts of edge. Now, before I go any further, okay, selling options is positive time decay. When you sell options, every day that passes sees the dwindling of options premium. When you sell something for $1, you know, it's like pouring water on the witch and saying, I'm shrinking. Okay. As time passes, the options you sold decay exponentially. Let's just take a moment. Breathe, people, breathe. All right. Take a moment and review a little bit about decay. So, theta, feel the burn. Okay. What this basically means is, and this is where I'm going to tell you right now, for those of you that have experience in this business, you better pay attention, real careful attention, because most people, what they know or what they think they know about time decay is completely and totally inaccurate. And you know, somebody was a moment ago, they're like, you know, it's almost an hour in. I gotta get some more stuff. Listen, you see this decay graph right there? Okay. We know this. You have that option, and the option's trading for $1. And the closer you come to expiration, the faster the option's going to burn, right? So here the option's worth $1. Over here, it's still worth about 80 cents. Before you know it, like, oh, it's accelerating. It's at 50 cents, and then it's like, it's gone. And a lot of people, what happened to them is they buy or sell options, and they do it. And they do it with like, you know, 1 month of time. Listen to me. Everything has changed. Okay. This is what Ultimate Trades is really about. Okay. Everything has changed. Now, careful, because what you think you know about time decay, you ain't seen nothing yet. Discovering probability and premium selling tactics. This is the exact same slide we just had 2 slides ago, right? I mean, it's just the same thing, except now it's a $100 stock. Okay, we're going to go over to a platform. Okay, we're going to go look at the spiders. The spiders, the mother of all products. By the way, the spiders, boy, if they rally today. I mean, this is just a rip roaring good time to the upside today. We're going to go into the spiders. I want you to, for a second, you forget about 38 days. You forget about a month, okay? Because that is a massive, massive misnomer. I'm going to go 101 days out. Okay, you're like, what? Yeah, I'm going to go 101 days out. And I just want to prove a quick point, 101 days out, okay? And I'm actually going to go 101 days out, and I'm actually going to tee this up really quick. Here's 101 days out, which is the June expiration. The market's $1.43 to $1.45. One of the first things you want to learn about selling out of the money options is you better do it in a liquid product. The spiders doesn't get much more liquid than that. Next thing, the marketplace. I looked at a chart. It's at all-time highs. Good, done. All-time highs today, okay? Good, done. So the market's $1.43 to $1.45. I'm going to come in here and I'm aggressively going to route this trade. I'm going to route the trade at $1.44. The way this actually works, either they fill me instantaneously, okay? If they fill me instantaneously, great. Otherwise, they have to represent me into the market. So if the market's $1.43, $1.45, and I come in and try to sell this at $1.44, they have to change the marketplace to the $1.44. You ready? Hit confirm and send to the trade. They're going to move this now to $1.44. If they don't fill me, there it is. So they move me to $1.44. Why? I'm next in line. Retail orders have preferential treatment. Very few people actually know that. Now, timeout. Okay. I don't need to go back to this slide of like, oh, it's a $100 stock. And then let's get serious. Let's actually go live onto a trading application. So what you're looking at right now is a 435 call. 435 call gives somebody the right to take stock from me at 435. Where's the underlying trading right now? Okay. Over here. Now, when I say over here, let me actually kind of enunciate this as clearly as possible. By the way, we're just waiting for a fill. I don't need to fill immediately. Look at this. This is a 10 delta option. This thing's so far out of the money, you can't even see it. Okay, you're looking right now at a 435 call. And that 435 call, how much is it trading for? $1.44. How many days to expiration? 101 days. Okay. Here's actually the key question. Whether you're experienced, whether you're inexperienced, you want to be able to make money. You don't want to be able to make money, okay, on a more routine basis. And what a lot of people miss, decay has completely changed. And I'm actually going to change the way that you feel about this marketplace. The decay has actually changed because of Ultima, which is the volatility, the volatility, the volatility. Let's hammer you on that for a second. Stop everything. Okay, close all this up for a second. Okay, what's this 435 call going to be worth in exactly 30 days? I want to know, what's the 435 call going to be worth in 30 days? okay? Assuming that there's no movement in the underlying. I don't worry about a MACD, a Fibonacci, a Bollinger Band. I don't even need a stochastic, okay? What's the 435 call going to be worth 1 month from now? There's an easy way to find that out, okay? What we're actually going to do is we're going to look at a 101-day option. See right there, 101-day option, okay? And we're going to look at its 435 call, which we did. We know it's trading for $1.44. Then we're going to look at the 73-day option. Why? We're going to look at the 73-day option because shouldn't the 73-day option, okay, that 73-day option, shouldn't it basically be, okay, the option that you're looking for? And when I say that is, what's the difference? This is just 30 days into the future. So let's go look at the 435 call. This is a 435 call. Precisely what? Okay, 1 month from now. So everybody thinks that they should sell options with really, really short time premium. Why? You should sell options with short time premium because I only have to sweat for 30 days. I'm only going to sweat for 30 days. Okay, but I'm going to sell stuff so far out of the money, it's ridiculous. Okay, here we go. Now I am exactly at the 435, and here we are with 73 days left. Okay, so now we have 73 days. We're still looking at a 435 call, and it's trading for what? 70 cents. How much can you make in 30 days? Okay. Oh, you can make about 50% plus. You're going to make 50% plus. Okay. How much risk were you at? And there really wasn't that much risk. All right. Now everybody immediately jumps in there. They go, what about margin? What about margin? What about margin? You don't have to worry about margin. We know how to circumnavigate that. There's new products. Now think about that for a second. Okay. One of the biggest misnomers in this business is that you want to sell short-term options premium. I'm telling you right now, you want to sell short-term options premium? You go at it. You're going to get killed because they don't realize the skew has actually changed, okay? And it's here to stay. Retail customers have actually changed skew. So if you go do the exact same thing, you're like, I want to collect about $1.44, okay? Oh boy. Now you're actually what? Now you're trading the 410s. You have 38 days left. And for the next 38 days, you're going to sweat. But you're like, but I can make the full $1.40. You're going to make the full $1.40 and you're going to take every ounce of risk for that thing and worth it. You're not going to make money that way. There's no edge in their type. The edge now actually exists out in time. The argument that we'll make all day long, the percentage of decay is more substantial in the longer duration options, okay? Longer duration out of the money options actually have a greater percentage decay on a day-to-day basis than shorter duration options. Okay, it's a huge misnomer. Unless you've actually like looked at accounts, studied accounts, and actually looked at the changes and the tweaks and skew, nobody's actually looking at that stuff. Okay, now, professional trading firms are. There's no question about that. And how do I know that? Because they're out here, right? Look at like volume and open interest. Yeah, who do you think's doing a 10,000 contract? That's volume today. Think I'm crazy? That's 10,000 contracts traded today, right? That ain't me. Okay, look at the contract size out of it. This is June. That's today. Why is somebody actually whipping 10,000 contracts at 429? Because they get it. That's what it is. They get it. All right. You'll see the out of the money puts. Okay. The out of the money puts won't even trade nearly the volume now as the calls. Quite ironic. Okay. This marketplace has changed and most people are not ready to change with it. Okay. Why sell options so far out in time? As you may have noticed in my example, I sold options months out. In this case, I actually even over exaggerated. I went a few months out in time. Typically, traders sell shorter dated options. But therein lies, that's why you're tuning into this webcast here, because it's about specific criteria, okay? And it's of absolute critical importance. Anybody here can go, you should sell options. You need to know exactly the right options to sell, how far out in time to go, what is going to make the best candidate. What about margin requirements? It goes on and on and on and on. Okay. And that's one of the things that I stress to you. Okay. No spreads right now. Okay. But what we do here at TheoTrade is just that. We provide the criteria. Now let's get to some of the reality of this, right? So all I did right now is I got work in a trade. Oh, look at the market now. It's $1.42 to $1.44. But hold on, let's actually go out. Let's do it again. In slow motion. Let's go to the IWM. The IWM is actually the Russell. I'll do the exact same thing inside of the Russell. And I want you to see there's positions on already in here. So we're going to go to the Russell. Just going to pull up Delta really quick, my trusty little Delta. Okay. And I'll tell you what, I'll route this. Here's a market. This is going to be an interesting one. $1.17 and $1.25. Where can I fill? So if it's $1.17, $1.25, okay, watch the market on the screen. Initially, we're going to come in, check this out. All right, so I filled in the spiders. Told you I'd fill at $1.44. Okay, I mean, it's crazy, right? You're like, oh, he knows how to get good fills. So let's imagine that. I've had 22 years on this trading application, and you start to really learn. So $1.17, $1.25. So I'm going to route it to $1.23. What are they going to do? They're going to change the markets. They're going to move the market at $1.23 now at $1.20, or sorry, $1.17 at $1.23. So I am now the best bid, best offer. So now we're actually going to come in here and we're going to penny increment them down to $1.22. They're immediately going to change the market to 117, 122. Done. Okay. Now I'm actually going to penny increment them one more time. And then I'm just going to work the order here down to $1.21. If they want me, they got me. Meaning that if they want to fill this trade right now, they will. Boom, filled. I just filled it again. This is actually walking the orders. You're like, whatever. You realize if you're doing like 10 contracts or so, okay, you're saving hundreds of dollars just learning like little execution technique like that. People go, commissions is nothing. You're right, commissions is nothing. How you execute trades today, though, is everything. So I went out there and just sold, okay, in this particular case, the 265s. Well, time out for a second. So I just sold the 265 calls. In what? In IWM. What are those 265 calls going to be trading for? So I sold them basically at $1.20. What are they going to be trading for exactly? 30 days. If you want to sweat for 30 days, learn the right 30 days to sweat for. Remember, okay, you should make about 50%. They're going to make about 50%. Okay, look, I sold them for $1.20. They're trading 62 at 65. It's almost exactly 50% of the premium can be burned from 100 days to 70 days. You go, what do you do after 70 days? I don't care, but you better keep burning longer duration premium because it's a party right now, right? And again, you got to get on that bus. Listen, 90% probability in the 10% hammer. 90% probability in the 10% hammer. This is one thing I really, really want to stress. 90% trades is exactly what I'm doing. It sounds great. It sounds wonderful. Until 10% of the time, the market just completely rips your face off. Okay. Now, how many people have been through this? Okay. How many people have actually been through this logic a little bit? So, and I'll take the little break here, a little bit of coffee. So one of the things, that's the downside of the camera. When you spill stuff all over yourself, one of the things you have to realize is that high probability sounds wonderful, okay, until you're wrong, okay? And you get hammered. You get hammered. I'm going to tell you exactly what happens, okay? Most people learn, like on a webcast like this, I'm going to tell you exactly what people do. They go out there and they learn to sell options premium, okay? And they start off and they go, I'm just gonna dabble a little. I'm just gonna dabble. And you learn something like an iron condor and you go and put one on. And the iron condor that you put on, it works. And you go, yeah, that worked. I like that. But you get a trade that had like a 90% probability. What'd you think was gonna, of course it's gonna work. It has like a 90% chance of working. They go, okay, I'm gonna do that again. So you go out there and do it again. Lo and behold, it works, okay? And now by like the second time that trade has worked, you're like, now I'm getting a little cocky. Now I know what I'm doing. I have done this twice. On the third trade, instead of doing one contract, you were like, one contract, Captain One Lot rides again. Anyway, instead of doing one contract, now you're doing 3 or 4 contracts. Okay, before you know it, by the 5th trade, and I'm honest because I gotta remember, I watched order flow for 15 years. By the 4th or 5th trade, you think you are so smart that you've actually left the spiders. You're like, screw the spiders, man. Now I'm trading SPX, baby. And instead of actually just trading the spiders and doing 3 contracts, now you're trading the SPX and doing a 10 lot. You do a 10 lot and the market's like, come on. And you're like totally getting led down this road. It's an evil road. And all of a sudden, of course, train wreck. And your losses from one trade is going to exceed everything you made and then some. And you're actually left like a basket case rocking back and forth. And you're like, and as I put in the slide, it's no, I know, it's like I could see your account. I could for 15 years. I think I don't know the plight of every premium seller. I make a little, I'm getting smart. I make a little, train wreck. Okay, completely sets them back. You build up your contract size, people lose everything. Okay. How many people have done this before? Just making sure that we're all on the same path. Okay, because I ain't new, neither are you. By the way, then after that, after you've done all this, wait, I got another slide that you guys are gonna love. It's gonna drive people that have ever sold options premium just So after you experience this, you go make a little, make a little, make a little. Oh, I get slaughtered. Okay. Then you go into here and you go, I can fix it. I can do this. Fix is a dirty word, because then they go in there and they try to fix it and they go, oh, I'm totally a cynic regarding fixing trades. Fixing trades, oh, please, let me tell you right now, just get out a shovel, just start digging, because anything that fixing a trade, I've actually listened to other webcasts over the years. So it says, you can fix anything. Really? Okay. Really, you can fix anything. So fixing, the very word fixing implies more risk, more commissions. So by fixing a trade, the very notion throws more good capital into a bad trade, but you don't call it that. You go, we don't call it good capital in a bad trade. We call it morphing. If you have an amalgamation of garbage and then you mix it out, you still have an amalgamation of garbage. Anytime you're fixing a trade, it's more risk, more commissions, more transaction costs. The very notion of fixing, it's an absolutely horrible idea. You got to throw it out like yesterday's trash. The only analogy I can give you, especially in this business, I want you to think of the idea of take a car, you just drive it off a cliff, and then you bring it to a body shop and they go, what am I going to do with this piece of junk? What am I going to do with this piece of junk? People email me all the time. They go, I've had a trade go horribly wrong. And I'm like, oh, that's nice. There's nothing you can do after the fact. Okay. It's like taking a car, driving it off a cliff, bringing it to a body shop. Do it right. Learn how to do this correctly the first time through. That's what people don't get about this business. It's, you know what? Bad trade's a piece of junk. Let it go. There's no reason to ever fight a bad trade. Oh, I know why people fight bad trades, because they have too much capital tied up in them in the first place. You got to learn how to do this right, right? Selling options premium. Now, I'm going to go off for a couple of moments here and actually structure how to do this and do this properly. Okay. Not everybody's going to catch every little nuance in here. That's okay. This is what we do here at TheoTrade. First of all, okay, we have an underlying. Let's call the underlying, instead of stock, let's actually call the underlying the spiders. I'm going to use the spiders in this case, and the spiders are trading right at 390, okay, which is where they are. We're going to go out, okay, in this example, and we're going to sell. Okay, and you know what? I'm going to make this even easier. We're going to sell a 435 call. That's way out of the money here. Okay, we're going to sell a 435 call, and we're going to collect, I don't care, $1. Then I am simultaneously going to go out here and just make a quick point. Let's do this. Let's do this. Okay, let's sell. In this particular case, I'll just make it a 300 put. And the 300 put, that's going to be trading for a lot more than $1. That thing will probably be trading for about $2.90. Now, all I'm initially going to do is I'm going to sell a call and I'm going to sell it naked. And I'm going to sell a put and I'm going to sell it naked. Immediately, everybody balks and they go, what about the margin? I said, don't worry about margin. Okay, margin is no longer a big issue. You can totally circumnavigate whichever you think the margin is. This trade, okay, this trade can actually be done in a $2,000 account now. Okay, this trade can be done in a $2,000 account. So few people actually recognize that. Now, I don't want you to go out and just do one trade, okay, and just sell these things naked. I want you to actually go out and I want you to layer other positions on. Okay, I want you to layer several different positions on. Why do I want you to layer several different positions on? Because I don't want all your risk at one place at one time. See, people go out there and they just go, I'm going to trade big. I'm going to get it done. I just want you to put on a couple of little positions, just a few little positions. And I want you to scatter them very nicely, okay? And then you can actually use what we term good till canceled orders. What's a GTC? If you've never heard of this before, GTC, you don't even have to sit there and monitor them. You're going to use a good till canceled order to monitor and to close the position for you. Now, stop right there. If I sell a bunch of stuff out here, okay, we sell like a 320, we sell, for instance, like a 280 put, okay, we sell a couple of out of the money puts, then we sell like a 450 call. All right, we've got, you know, a 440 in here and a partridge in a pear tree. So I'm just selling, I'm selling. I'm going to scatter some stuff out there. What's the risk? You tell me, what do you think your risk is in this particular equation here? The risk is really simple. If we move up or down, huge, okay? If we move up or down, huge, we could be taking, all right, what we would construe as catastrophic amounts of risk. Okay, think about it for a second. If we move up or down huge, we could be taking what we construe as catastrophic amounts of risk. So how do you reduce the risk? We actually use hedges, okay? There are several, okay, 3 types of hedges. When I say hedges, all right, hedges, what is a hedge? First of all, let's get rid of this little GTC over there, but okay, what's a hedge? In this case, all right, we're gonna look at what's called an RTS, okay? This is what we call a VIX vol. And last but not least, okay, a gamma iron. There are 3 definitive hedges you can actually use against this position. You know what a hedge is? A hedge is a very, very small position, just a very, very small position that we're going to lay somewhere right down here. Okay, right here, we're going to lay a hedge. We'll call it a VIX volatility spread. A VIX volatility spread implies that I'm actually going to use and trade the VIX. What happens is this: if the marketplace comes crashing down, okay, the VIX volatility spread explodes in value, literally covering a huge number of the losses that you could absolutely incur on selling naked puts. So the thing is, where people get themselves in trouble, okay, they sell stuff out here and the market goes down faster than they can react. You're dead, okay? You're dead before you even wake up in the morning. Think about that for a second, because some of you have actually experienced this. I don't want you to experience that. I know the SPY is at 390. I know the spiders are capable of going down to 300. I saw what happened last March. So if they go down to 300, you have a spread on. It's called a VIX volatility spread. The VIX volatility spread explodes in value. Explodes in value and actually pushes, okay, all the risk out. The other trade that we have on is what they call like a gamma iron. A gamma iron actually reduces risk, both the upside and the downside. In a fast, vicious move to the upside or the downside, the gamma iron, okay, offsets a huge amount of risk. We also have trades called risk twist spreads. Selling options premium. Selling options premium is not about the use of just selling naked options. Okay. The one thing you have to understand right now, okay, there is edge, and it is very, very definitive edge out here and out here. We want to be in the business right now of selling options, and we want to be in the business of selling options far out of the money, and we want to be in the business of selling options far out of the money, far out in time. Why do we do far out in time? Because it doesn't take that 30-day wild, what we term gamma risk, okay? But the only way to do this without, okay, without taking extraordinary risk is to use, okay, defining hedges. And defining hedges, again, the RTS, all right, the VIX vol spread. And again, last but not least, okay, the gamma iron. Do these trades cost a little bit of money? Absolutely. But most of them last months. So if you're going to sell premium, you're going to generate income on a month-to-month basis. You can put like one VIX volatility spread on. That thing literally can last months. And that's one of the things that, like, again, you know, I urge you guys to learn stuff like this. And I've got a couple of orders over here, but lo and behold, look, okay, you can see I've got a VIX volatility spread. Down below here, it's up 150%, right? I have an HYG. My HYG, it's down. You know what? My HYG spread should be down because it's a hedge. A hedge is a sacrificial lamb trade, okay? That's why I'm telling you, right? This stuff, it's imperative that we understand the correct way to sell options premium, because nothing could be more simplistic. I just sell something, okay? Leave it alone for 30 days, and you're up 50% at the end of the 30 days. Okay. I'm actually going to show you a ton of trades here momentarily. Listen, this is why you want to sell premium, especially right now, and get involved in Ultima trades. Premium can now be sold in small accounts. And I've alluded to that so many times, and I'm going to torture you with this, even under $5,000. Okay. And yes, you can actually sell naked calls in an IRA, right, with under $5,000. And most people are not aware of that. You produce positive theta decay, may enhance existing positions. You know, you don't just have to sell premium naked. You may own a bunch of Apple and want to sell some options against Apple, but you're selling all the wrong options these days. Okay, duration is where it's at. Provides an incredibly high probability of success. You never need to buy or sell the stock, but here's the key. And this is where, you know, somebody's like, I can look at charts. You can look at charts. I have no problem with that. You can look at the MACD, the Fibonacci, okay? But in this case, You can be dead wrong in market direction and still produce profitable trades. Again, I'm going to show you that in just a second. And I'm telling you right now, you need this in your life. All right. You want to actually have consistent generation, because what people are doing right now is they're like, I'm going to go out there and roll the dice on GameStop. I'm going to roll the dice on this thing. Rolling dice, okay, works once in a blue moon. You want consistency? You're going to sell premium. You're going to be involved in Ultima trades. I'm telling you, you need this in your life. Selling premium can potentially bring in consistent returns while minimizing your risk. I mean, the risk in there is really going to be mitigated, all right? If you want to learn how to do this, okay, listen, let's discuss a little bit about criteria. Before I get too detailed, before I start digging deeply into criteria, what criteria amounts to is a detailed recipe. Literally shows you step by step how to get in these positions and out of these positions. But before I go any further, okay, I'm actually going to show you a couple of trading examples, because people always say, well, let's see some trades. Let's see your trades. Remember something. These trades are what? Okay, they're high probability trades. Variations of all the following trades can be done. And this is about the 5th time now I've said this. Variations of all the following trades can be done with as little as $2,000 in a funded brokerage account, and can be done inside of retirement accounts. Again, it's like the 5th time I've reiterated that. Here, I wanted to start with Tesla, one of the most formidable stocks, okay, pretty much in recent history. Now, inside of Tesla, first of all, if you've never seen what I'm showing you here, okay, this is a screenshot. When I say a screenshot, it's Tesla, it's a short call. The screenshot basically, this is the opening day of the trade, the closing day of the trade. To open, to close. The reason I'm bringing up Tesla, these are calls. What was Tesla doing, all right, back in what, November and December? Tesla was going straight up, okay? I sold calls, which means I was completely and utterly wrong in direction, and I made 83% return. 83% return, I could not have been more wrong in direction. Again, you guys are going to start learning stuff from looking at some of the trades. It's 83% return on Tesla. Okay, moving on. Here's another Tesla position. By the way, okay, I have a couple of Tesla trades. So here's the next Tesla trade. This one was actually put on December 14th. Okay, exited what? December 21st. So here again is a 950 call. I just want to show you if something works, I have a tendency to do it again. In this particular case, I actually sold Tesla calls for $4.25. I closed those Tesla calls, okay, for 42 cents. It's a 90% return. 90% return in what? In a matter of 1 week. Why? Tesla volatility. Okay, but that's the 950 calls. And again, let me show you what Tesla was doing at the exact moment that we were doing these trades. So here's Tesla. Back it up for a second. All right. So here were some of those trades, and you can even see on the 14th. Look at this. Okay, there wasn't huge movement in here. There was not huge movement in here at the same time, but the stock was actually exploding, literally exploding to the upside. I'm here selling calls. So if you think that the directional bias has a lot to do with it, it has nothing to do with it. It has everything to do with the criteria, everything to do with the implied volatility. I'm not done. Okay, here's another one. Okay, here's one on what? January 8th, closed January 11th. Here's where I sold a Tesla 1260 call, bought back to Tesla 1260 call, sold it for $4.50, bought it back for $1.90. One thing I want to mention over here, yes, this is a 58% return, okay? Nevertheless, you could have done one contract. One contract you could have sold for what? $450, and you buy it back for $190. If you do 10 contracts, it's $4,500 buying back for basically $1,900. You can do as many contracts as you are comfortable with, as many contracts, of course, as you can actually handle. By the way, people always ask, where do the account statements come from? In this case, here's Tesla. Okay, so I'm just showing you exactly where these screenshots came from. Okay, they came from this is my PM account. It's actually a portfolio margin account in this particular case. And you can actually see all the different positions, the opening and closing. There was one there for what, 425. Here it was. Right, here's the closing position of it, okay, and on and on and on and on. So I'm just showing you all the opens, all the closes of this. Moving right along over here, because again, this is old stuff. Let's get a little newer. This is bonds. So bonds have been a rocking lately. So I figured I'd do a couple of bond trades. By the way, I carry lots of bond positions. I have no qualms in saying I get involved in the bonds. I'm up about $1,000 inside of bonds today. Okay, but I will trade the bonds from time to time. There's no problem with that. Why trade bonds? Minimal margin, minimal margin. Yeah, most people don't know that. The margin inside of the bonds is so negligible. So here's a trade that I actually put on, okay? And basically in one day, this bonds were rocking. Okay, I sold a 161 put, bought it back the next day. Sold it for 14 ticks, bought it back for 6 ticks. That's actually a 57% return. Bonds are weird though. They still actually use fractions. Like, I don't use fractions. Bonds use fractions. We okay so far? All right, we okay. By the way, I like what somebody said. The Tesla examples are 2 to 3 weeks. I didn't even need to have 30 days. The bond trade is what? It's a day. It's a day. Why? Out of the money options. They're super sensitive right now, super sensitive to changes. Okay. The next one, by the way, just want to show you guys. Here's a bond short put. Here's a bond short put. This is basically a trade that I did almost the exact same trade. In this case, I sold 15 ticks, bought it back for 7 ticks. Again, I'm just showing you 2 different trades. Once again, I also I show these in slides because it's nice and clean, but I never mind going directly into the account where all of this is traded. Okay. And I'll show you exactly where the trades are. Here's a trade actually where I opened for 15 ticks. Okay. And that is what? The 162 put. Here is the 162 put. I covered it for 7 ticks. Here's one that I actually sold 14 ticks, bought it back the next day for 6 ticks. Right. And here's other positions, obviously, that I've put on. I haven't closed yet. I don't mind showing that either. Okay. So what are we doing? We're banging out what? 58% returns, 57% returns, 53% returns. Next, IWM. You saw me today selling IWM call. Okay, here's an IWM short call. In this particular case, I want to get a little bit more recent. So now we're already at the end of January. Okay, here's an IWM 231 call, sold, approximately made a 62% return. Moving right on, IWM short call. By the way, I'm actually just going to do IWM right now. This is my inventory. This trade was actually held almost a month. This thing was actually held just about 3 weeks. Sold it for $1.16, covered at 55 cents. It's a 53% return. Here's actually another Tesla short call. So going back to Tesla over there, that's because this one is actually closed the end of January, 76% return. Okay, and again, this one was at February. Check this out. February 1575, baby. You know what? That one I'm proud of. I'm proud of that one, and I'll tell you exactly why. You realize, and let's see, there it is, the 1575s. Okay, people, that was like the last trade I did in there because I actually hit the golden goose. That was the highest strike at the time, pretty much available. I sold it for 266. I covered it for 64 cents. So, I actually captured a unicorn. You're seeing a live unicorn right here. And in 2 days, I made 76% on that one. The next one, let's actually jump into the spiders. On the spiders, the late January, I actually sold some puts on spiders. Here's actually a 60% return, sold the 279s, bought back the 279. Speaking of the spiders, I don't want to, again, shy away from anything here. This is over the last, This is the last 110 days inside of the spiders. I traded the spiders a little bit. I opened, I closed. I opened, I closed. I opened, I closed. Okay, there's a lot of positions in here, so watch along. Okay, so this is one only took a couple of days for a 60% return. Actually sold puts for $1.46, covered them for 58 cents. Okay, the next trade in here, and again, these are different trades. All right, this is the 275 put. I opened it, I closed it. 275 put, 241, closed it for what? $1.20. Here's actually a SPY, another SPY short put. Opened it for what? The 260 puts for 284, closed them for $1.39. Here's a SPY short call. All right, now we're getting a little bit more recent, 57% return. Opened it for $1.20, closed it for 52 cents. Again, here's a SPY short call, another short call, 435 call. Ironically, this is the exact same strike that we just talked about in June, 435, sold it for $1.31, closed it for 67 cents. Okay, here is the SPY short call. Again, now we're getting really recent. $1.82, closed it for 91 cents, 51% return. Now we're into the QQQ short call. Opened it for 99 cents, closed it for 38 cents, 62% return. Here's another QQQ short call. Opened it for 85 cents, closed it for 40 cents, 53% return. Okay, here's one closed towards the end of February for about a 50% return, open for $1.15, closed 57 cents. Here's again another one, QQQ short call. Again, I just do the same trade again and again and again and again, but I want you to see they're all different strikes. Look, here's 375, right? 375 made a 53% return, 385, 50% return, 390, 50% return. Okay, here we are, 355s for what? Another short call, 64% return. Okay, another short call, the 360s, 53% return. Okay. Another short call, 370s, 57% return. Okay. IWM, again, here's an IWM. Is this getting a little bit more recent for you? 56% return. Okay. IWM short call, 50% return. 245 call for a 54% return. Okay. Here's another IWM short call for what? 54% return. Okay. QQQ short put. That short put right now, that was actually closed, well, today. That was actually closed today. This is the one that I actually put in here right before we started over here. That's a 52% return on the QQQ short put. People, I could go all day long. And again, this is the spiders. I just want to show you IWM. Okay, this is my IWM. There's 37 fills in the last 110 days. So everything from opening and closing positions, all of it. Okay, again, I never actually hide any of the positions, anything. It's completely the full Monty in here of every execution that I've done. And you can see even up till, well, today. This is actually the IWM right there. That's the 265 calls. You can see I actually executed those on 3/9, which is, well, literally today, right? What I'm actually touching upon today, is critical stuff. Again, Ultimate Trades is where it's at right now. I mean, what better time to learn a skill set that can literally last a lifetime? And whenever you're going to have time like this, again, most people are probably working from home. Some people are working part-time, but if you're working from home, you're working part-time. But if you're quarantined still, which is very few of us, but if you are quarantined, it's a great way to emerge stronger, okay, in better financial shape. I'm telling you, okay, you need to learn this stuff. What some of our members are saying. I just took a smattering of a couple, people that wrote a couple comments over here. I like this one. Brent W. You won't find a more supportive and more profitable room anywhere in the retail business. Okay. Daniel Fabian. Hey guys, new member. Been lurking in chat for about a month. Was short the SPY. TheoTrade is the only membership I've ever had that pays for itself and then some. Right. If you don't have a huge amount of time, like I don't want anybody to be down the road that this is hands-on all day. We're going to sell some premium. Okay. We're going to manage that premium risk by using, okay, out of the money hedges, very, very inexpensive out of the money hedges. We're going to reduce risk, and we're actually going to use set and forget, or what we term good till canceled orders. So I throw this up here because I don't want you to think that you have to, again, there's no implication of being glued to the screen all day long. This is not anything like day trading. And if you are day trading, that's fine. You could do that on the side, but even a fraction of a time in this particular, strategy is enough to see, results. Again, the characteristics though of selling Ultima Premium. First of all, I think that the selling high probability Ultima Premium, it's undeniable, right? You never have to buy or sell the stock. Risk is limited to precisely your comfort level. That's up to you. You actually have to tell me, what you want that risk to be, and we can actually literally tweak it, right? You're never going to use a stop order. Stop doesn't exist in this world. This stop order is never going to save you out there. You can vary time frames, minimize your risk. Probability of profit is incredibly high. I mean, most of the time when you're selling premium, it's like watching paint dry. I mean, literally, you go out there and sell premium. Somebody was like, oh, that's it. Like, look, we just went out there and did an IWM trade. Did we not? We did an IWM trade. I don't mind showing it to you. Okay. Is it up money? Is it down money? Well, we put it on, and right now it's up $1. Okay. I just fired off a one lot because I wanted to make a quick, I guess, example out of this one. But this is like watching paint dry. Like, if you want some excitement in your life, okay, who cares? Just try to make a couple of bucks. Like, get back, reduce risk. That's what this business is about. This is not like, the most exciting strategy, but that does work. And that's what's important. The probability of profit is great. It's a perfect strategy also to enhance your current portfolio. It's an excellent tool for returns to be able to build account. And I'm going to reiterate this now for the 6th time. New products allow for the sale of options premium in nearly any account size. Okay. And I know that a lot of people go, my brokerage firm doesn't allow me to. It doesn't matter what your brokerage firm allows. Okay. We can actually show you how to do this and how to do this properly in literally, okay, any size account. Building a portfolio of options. Okay. Listen, do not let options intimidate you. Like, selling premium can be done for minimal credits, but minimal risk. But the sale of premium is also like what you're learning here. This is a massive power saw. And I don't want anybody to run out. Like, you have this brand new shiny tool and I don't want you to run out and use the tool without understanding. I mean, like if you're going to build a house, what are you going to do? You're probably going to use some type of table saw. But if you don't know how to use a table saw, you're going to lop off a couple of fingers. Options are the exact same thing. Options can be the quickest, the fastest, the safest, the easiest way to get where you want to go in this business. But if you don't understand how to sell premium correctly, if you don't understand what Ultimate Trades really is, you're going to lop off a couple of fingers. Listen, you can sell Ultima Premium and you can minimize risk. Maybe you don't have options experience. Maybe you have limited experience. Do not let the options intimidate you. That part of it is easy. You need these strategies for the foreseeable market future, because if you haven't noticed, this marketplace is not going to be all roses. Like the volatility is up and the volatility looks like it's going to stay up right now. We can show you how and when to sell premium in a matter of a few hours. TheoTrade creates detailed recipes for every strategy, including selling Ultima Premium. And it's just, I say this all the time, but you wouldn't bake a cake. Like the first time through, you wouldn't bake a cake without a recipe. So why trade without one? And that's what most people do, is they just get into the marketplace. They're like, I think that's going up. Okay, I think I think this is going to happen. Right? Let me explain what criteria is. This is what you need to know to successfully sell Ultima Premium for a living. Okay, what underlines stocks, indices make the best Ultima Premium candidates? Like you just saw me. What did I use? Which stocks and what are some of the best premium candidates? Anybody? Again, you just saw me a moment ago. What did I use? I used a little Tesla. Tesla's off the radar screen. If you hadn't noticed, I hadn't after I hit my unicorn trade, it's gone because Ultima's gone out of it. Okay, completely bled out. Saw me use IWM. Definitely saw me use QQQ. I used the bonds. Use a little bit of spiders. How boring is that? Nobody said this had to be exciting. Boring is good. Boring makes money, right? Because I'm going to tell you, one of the biggest problems is, what volatility should I seek out? There's a definitive amount of volatility you should have over here. Next thing, what options expiration do I select? I know you're immediately going to say, you showed me. It was 101 days out. Go check out an option chain. Okay, seriously, go check out an option chain. Here, we'll open up Tasty. We'll pull up the SPX, the mother of all option products. Okay, look at the SPX. Got enough expirations on here? Okay, maybe if selling 101 days out, selling 113 is better, or 128, or 80, or 73, or 27 cent hike. There's so many expirations. Okay, you need to know precisely what expirations you're going to select. Okay, what should be the delta of the option I sell? Delta. We're going to tell you exactly what delta to fine tune. Okay, by the way, the delta of calls differs from the delta of puts. It has to. Why? Because there's what they call skew. For those of you that speak geek, there's skew, there's kurtosis. We're going to tell you exactly what delta you should be trading on both on the call side and the put side. What options do I buy against my position? That means the hedge. Okay, how do you actually put that hedge in that perfect spot, the absolute perfect spot to mitigate the risk and the exposure that you just put on? How do I actually build the position? I don't mean how do you sell an option? Forget, anybody can sell an option. Don sold a 435 call. I'm going to sell a 435 call. Again, that stuff is 90% trades, right? And that's what I started with. People make money, they get killed. How do you build a position? A position is when you actually put on a little position here, a little position there, reduced risk with a risk twist spread, put on a gamma iron, okay? When you build a position, you're going to know it, okay? As I say, talk about building positions. This is what a position is. I got a little IWM, a little QQQ, a little spider, a little VIX, a little XLU. The XLU is about to close profitably. I got working orders here in the spiders to close those profitably. You can see working orders here in the IWM and working orders in the ZB, all to have them close profitably right now for what? Decent sized return. Okay. This is what this business is about. All right. We're not going in there and trading big in anything. I want you to see something right now. Okay. I have enough capital. I have in this particular account over $500,000. I'm trading one lots. Captain One Lot rides again. Okay. You see me trading one lots. You don't got to be big to be profitable. And today, just this little one lot account, this is just a one lot account. And all of our clients, okay, see this and follow it. Okay. That one lot account still up $1,000 today. Nothing big, nothing crazy. Okay. Still up $1,000 today. And that's actually with the market technically moving against me. So how do I build a position? Okay. Do I need a large amount of capital? This is now the 7th time I've said this. No, you do not need a large amount of capital. You can actually do the trades that I'm doing, like $2,000 in your account. What's the right amount of risk for you? We can help you actually fine tune what you want your risk to be. What are the percentage of returns supposed to be? Did anybody see a common theme in my percentage returns? Did you? Did you see a common theme in my percentage returns? Because I was laying it on pretty thick there. I mean, I'm like, literally, I'm like, I made this, I made this, I made this, I made this, I made this. By the way, the trades I'm showing you is just like the tip of the iceberg. Okay. I like it. Somebody already came in. Yeah, about half. Okay. It's about half. It's about right. So we'll actually show you the percentage returns, but this is really fine tuned. How do I protect myself from market crashes? You're going to wake up one day, okay, and not everything is going to be all rosy. You're going to wake up one day, and this is where people go, if it goes against me, I will get out. No, you won't. You're never going to get out. You can't get out. Okay. That's the one thing that I'm a specialist in. You can't get out when you need to get out. How do I know that? 15 years in the brokerage business. Before that, I spent 2.5 years managing risk for a trading firm. My specialty is when you can't get out, I make a ton of money. You got to understand that you're going to wake up one day. Okay. And I'll give you an example. August of 2015, you woke up, limit down. Okay. What's limit down? That's when the marketplace opened, but then locked up and you go, oh, what do I do? You had to stop ordering. You got absolutely decimated. Protect yourself from market crashes. Learn how to do this right. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. And I've mentioned that a few times as well. And what this is, okay, it's a pre-flight checklist. If you're gonna pilot, any type of aircraft, a Boeing 747, that's a big boy. You're gonna go out there and you're gonna fly an aircraft. You're literally, every time the pilot gets in there, no matter how experienced they are, they go through checklists. They used to actually sit there with, pen and paper. Most of them have it like on an iPad now. I mean, it always instills confidence when you get on an aircraft. I know a lot of people haven't done that in the last year. Get on an aircraft and they walk around and they're like pulling on the engines. You're like, oh yeah, I've got confidence in his checklist. One of them says, pull on the engines like a monkey. Anyway, the point that I'm trying to make over here, okay, we took that and we looked at these checklists, and those checklists were also used on trading floors for decades. I mean, traders that stand on a floor, most of them never made their own decisions. Okay, I worked for a trading firm. In the trading firm, I didn't make a decision, okay, for 2.5 years at a trading firm. I mean, they'd ask me, what do you think? And they go, I'm just kidding. Okay, everything is decided for you. Okay, this is how you get in. This is actually how you structure the position. This is how you get out. All right, this is and variables. Okay, because what you're going to learn about criteria, you're going to learn about these recipes is that trading it's all about answering what if. What might be a good stock or ETF candidate for you to sell premium? What's the correct options expiration cycle? How much capital do you commit to generating premium? What strike options do you sell? What strike price options do you buy? How can I limit my risk? TheoTrade has the answers. Again, we build recipes with definitive criteria, literally checklists for each unique variable that you're going to encounter. When I say variable, what do I mean? Okay. Answer to the question, what's the right probability for the trade? How many option contracts do you trade for a particular account size? When do you close the premium sale? What if the stock sells off big? Okay. What do you bail out of the trade? What if the stock rallies massively? What if expiration is coming? What if dividends are payable? How can I fix a losing position? And you just start to like spiral out of control. We answer the questions through criteria. We answer the how, the when, the why, at what price. And I'm telling you right now, it is just the beginning of the variables that you're going to face while selling Ultima options for a living. You can read about selling premium. You can read about selling Ultima premium, and you can read what it is. You might even know how to build a couple of trades. Some of you have already gone and sold a couple of positions, but you need TheoTrade's recipe for success. This is just my experience. I have 22 years, okay, of trading experience, and I had access to client order flow for 15 years and literally have viewed and studied millions of accounts. That is a huge portion, because what may have worked for some market maker doesn't necessarily work for you sitting at home, okay? I mean, again, I ran education for 15 years at a firm with the largest options order flow. We know, okay, what works best for retail clients, what you're capable of doing, what your time constraints happen to be, how you can execute, at home on a mobile device, whatever it takes. Listen, criteria is your recipe for success. The following strategy and the corresponding criteria, it requires the utmost attention to detail. We literally have spent years fine tuning, okay, the criteria, the trade setup, like how you actually structure each step to be able to get in. And then, of course, the variables to exit and all of the variables that surround premium selling. When you approach the section on criteria, you have to follow the steps to build the trade. Okay. We built a full blown 5-hour course that I am the instructor for. It's the Ultima, okay, income generator course. Okay. Listen, it's a 5-hour course. It's archived. It is available immediately. When I say it's archived, what we actually did is we recorded this class. We recorded the class no more than 2 weeks ago. We only did it 2 weeks ago. We did it, we cut it, we cleaned it. It's ready to go. It's available immediately for streaming, and it's available 24/7. You can even download, okay? You can download the entire course, right? And you can watch it at your leisure on your iPad. You could watch it at your leisure on any device, both, okay, Android and iOS. So we actually have TheoTrade mobile. You can even speed it up to play it back, but this is a 5-hour course. And again, it's available immediately. The class slide deck that includes entry and exit criteria, that checklist is available immediately right now for download. Before I go any further, okay, we're going to have a spectacular bonus for you today. So hang with me for a moment, because I know everybody, they look at this stuff and they immediately think, okay, and I want to address this right up before I go any further. They immediately think, oh, great, another class for $500, okay? She is spending, and listen, people have gone out there and they've done tons of these classes. You go out there and you do a class and it's $500. And then before you know it, somebody's selling you an indicator for another $500. And then you have to take a class for $500 to learn how to use the indicator, to learn how to actually do the initial class. And before you know it, none of this works. And somebody actually charges you $500 for a class. Like, I get it. People have been through the gauntlet of garbage out there. How many people have actually been through that series of classes? You went to a class, had to pay for the indicator to learn how to use that indicator at the class. They charge you another $500. Before you know it, you're into them for $1,500. We don't do that at TheoTrade. I'm just going to tell you right up front here, and then I'm actually going to show you some of the bonuses, okay, and what we actually have in store for you today. We will provide you everything, okay, from absolute novice to some of the most extreme traders out there to learn how to do this. We'll give you access, though, to everything that we have done since inception of TheoTrade. When I say everything that we've done, every archive, every course, every trade that we do, when I say, every trade we do, you will be able to see the trades in my account. You will be able to generate the trades from my account. We do send text messages and push notifications and everything, okay? If you need us after today, I'm also going to tell you this, okay, before I even throw a price tag to it. Because what's important here isn't the fact that it's $500 or whatever. It doesn't make a difference. What's important here is that you learn this stuff and that you have someone to support you, that you have someone you can actually go and say, like, am I doing this right? We provide you email support. You can email us after this, okay? We will return the email. You can ask trade-related questions. Most of us have been in the brokerage business. Most of us have actually traded at professional firms. We get the business. We can answer trade and trade-related questions. And that stuff is incredibly important to me, okay? So before I go any further, I'm telling you right now, what you see here, you are not just buying a course for $500. You're getting everything that we've ever done since inception, which is 2016. When I say everything ever done, every class we've done, okay, every archive, every coaching session, right? There are now 8 full-time instructors here at TheoTrade, all actually producing, okay, on a day-to-day basis in different genres of trade. Me, I'm the options geek here. We have a technical analysis geek. We have a psychologist on staff, okay? We have a day trader, 2 of them on staff. We have market technicians on staff. I'm going to show you that here momentarily. Stick with me, because I'm telling you right now, you will want to see these bonuses, because what TheoTrade is, Ultima Income Generator, is critical right now. The skew is it's just beautiful. And I mean, listen, there's a lot of classes here. Never done a 5-hour course. I mean, it's in there, man. You got to learn how to do this. You got to learn how to do it right. Okay, that's why it's available immediately for download. But stick with me for a moment because I don't want you to just look at the Ultima Income and like, oh, it's another class of $500. I want you to see the bigger picture. Okay. All right. Here's actually some of the curriculum for this class. Ultima Income Generator course curriculum. You're going to learn how to generate consistent returns. Okay. How to build a portfolio of high probability trades that generates consistent monthly returns. Okay. Starting capital. It doesn't matter about the starting capital, and it doesn't matter about the experience level. One thing I'm going to stress to you, experience level ain't going to matter. Okay, because we actually will take you literally from A, that I've never traded an option before, to Z. We will give you detailed entry and exit criteria for selling options premium while mitigating risk. You're also going to discover a little bit about option Greeks, the delta, and learn how to manage all of your positions through one number. Okay, you're going to learn to use a risk array. There's an entire section in this course about risk array. You're like, I don't even know what that is, but it sounds cool. Okay. You're going to learn to use a risk array. You're going to visualize profits. You're going to visualize risk before markets ever move. How to properly allocate in a way that reduces risk, okay, and allows you to minimize any risk in your portfolio. Really hands off. Like, you're not going to have to sit there all day and be like, is it okay? Is it okay? Come on. We went through a couple scary days. Like, I get it. Discover risk minimization like techniques, right? Designed to hedge even in some of the most extreme market environments. I talked about risk twist. I talked a little bit about gamma irons, talked a little bit about VIX fall spreads. We're going to teach you that. So you're never going to be caught off guard. You're going to learn how to sell premium in small accounts. There's an entire 2-hour subsection of this class. It's a 5-hour class, right? 2 out of the 5 hours, okay, is talking about small accounts, retirement accounts, okay, new innovative trading vehicles that have never been available before. All right, before I actually show you some of the bonuses, I also do this. TheoTrade now is a completely riskless trade. There's a 90-day money-back guarantee, okay? Money-back guarantee. If you're not satisfied in the next 90 days, email support@TheoTrade, receive a full refund, okay? I'm just going to tell you right now, anytime, no excuses, email us. You don't have to do a little dance, make a little love, get down tonight. You don't have to send us like, I need a certified letter in the mail. You just email support@TheoTrade.com. There's a money-back guarantee. There's no stipulations. We've never done that before, okay? We used to have stipulations like you had to trade live and you have to do this. Listen, we're beyond that. We have 6,000 clientele here at TheoTrade. We want them to want to be here. And I hope that makes sense. We want you guys to be here. No excuses, no questions, no commentary needed. Just email us and ask for your money back if you, okay? Go right now to TheoTrade.com. Go to TheoTrade.com/SKU to enroll for it, okay? It could not be easier. TheoTrade.com/SKU. And I will literally take you there, but I'm going to tell you right now, we include everything we've ever done. I'm going to talk about the bonuses momentarily, everything we've ever done. Go to that address right now. Okay, you can actually sign up for the class. You'll see all the pricing, everything in there. But stick with me. Now I'm actually going to show some of the bonuses. Okay, you want a bonus, like we get it. And TheoTrade goes beyond one class or one indicator. All right, you want everything, and you want to be able to trade and invest and learn everything at one place and one price. And one thing that when we built TheoTrade, we modeled TheoTrade, okay, to do just this. We don't want you to ever have to look outside for any education. Okay, we don't want you to ever have to like call up your brokerage firm and be like, am I doing this trade right? Your brokerage firm doesn't even answer the phone anymore. I don't care who they are. They don't answer the phone. You think Charles Schwab is going to answer the phone? Hey, this is Chuck. Okay, you're going to wait 2 hours to even answer the phone. TheoTrade is going to give you everything you need. All right, we're like the one stop that, maybe you were not aware of. Listen, okay, bonus number 1, there's a quick start beginner's guide. All right, it's a video guide. If you've never put on a trade before, I'm going to give you my training that'll actually take you from complete newbie to entering your first trade. If you're kind of curious what this looks like, right, I'm just going to throw this in there really, really quick, okay, just a smattering. But I want you guys to understand, right, that here's a start here menu. Options 101, options 201, options 301. We're going to get you ramped up and ramped up correctly. Like I don't want you to think that you're going to come here and be like, Ultima trades, okay? So we're actually going to give you a quick start beginner's guide. Good? Everybody get that? And when I say it's options 101, options 201, you know what? There's one thing I left out of here. And I you know what? I do want you to see this. For those of you that are extremely experienced, go check out order execution part 1, 2, and 3. You may think that this is options, 101 stuff, order execution stuff. after 15 years in the brokerage business, I will show you things, okay, that will twist your mind in ways that you never dreamed of. You will get better fills. That alone is going to save you a couple $1,000s. I'm telling you right now, I guarantee you that you are going to be blown away by what we do in the order execution class, okay? And again, getting your wrist under wraps, what products to watch and why. This stuff is essential. It's essential. I hope that everybody goes through the first bonus in here. Again, it's quick start beginner's guide. It's videos that you can obviously go through. Second on the docket here in terms of bonus, obviously we're giving you the ultimate income generator. So we're giving you the ultimate income generator, which is on demand. In addition to it, there's another 100 classes. We have 100 classes. Guide to small account growth with in-out spreads, surviving and thriving in extreme volatility, volatility back spreads, growing a small account. Okay, I mean, listen, how to collect income being short. The next big short, this is the risk twist spreads class, guide to selling high probability spreads, iron up, selling premium, minimizing risk, day trading NASDAQ futures, covered calls. I mean, listen, we could go all day. There are 100 classes in here. You want to see? Okay, I want to show you. So when you actually go, this is the TheoTrade class archive. When you go in here, there's option strategies, option newbies, technical analysis, futures and bonds classes, stock classes. There's different genres. This is just like literally entering into Netflix for trading. I'm not the day trading guy. No, we hired the best in the business for day trading. I'm the options geek, right? You want to see option classes? Today, now, you're about to have access to all of these. Okay, literally every single class that's in here you have access to. Trading VIX options, risk twist spreads, tetrapods. Oh, I love that. Option Greeks, ratio butterflies, duration iron condors, selling options, small account, straddles class, maximum returns with infinity spreads. It goes on and on. Black book spreads, controlling your risk. Okay, you name a genre of trade. I'm dead serious. We have it in here. So bonus number one will get you started. Bonus number two, we give you access to every class we've done. Every single class has criteria like I discussed in Ultimate Trades. Bonus number three, 3 months access to TheoTrade. That's a live trading room broadcast 6 hours a day. Look, we're live right now, okay? This is real, this is live. So when I say this is real, this is live, I'm just refreshing my screen really quick.
Amazing that
This is Tony Rago.
NASDAQ is up. I mean, just so large right now.
Okay, so Tony Rago is actually your day trader, in-house day trader. All he trades is NASDAQ futures throughout the course of the day. You don't have to be into it. I get it if you're not, okay? I do. We give that to you. It's part of it. So we broadcast for 6.5 hours a day. We do real-time trade ideas. He's calling out trades all day. I'm calling out trades. We do text and push notifications. There are also 5 unique trading portfolios where you can actually follow our trades. We have daily coaching sessions taught by a professor of finance. I'll mention that in a minute. Okay, instructors will also directly answer your trading questions. Again, your instructors here, they answer emails. I can't stress that enough. They answer emails here, right? Moving right along. All right, these are your TheoTrade instructors. Jeff Bierman. Jeff Bierman is actually a professor of finance at DePaul inside of Chicago. So if you frequent the Chicago area, he's professor of finance, but Jeff also worked with us at TD Ameritrade. If you've ever been on the Thinkorswim trading application, most of the studies on the Thinkorswim trading application came out of Jeff Bierman's head. Jeff is also a CMT. Next in the docket, Matt Williamson, market neutral and premium selling options strategist. Matt's the other options geek, but Matt is actually very unique in respect to the fact that Matt takes a very much almost like an engineer's like approach to selling premium and market neutrality. If you're into spreadsheets, if you're into edge, if you're into actually solving for edge, Matt Williamson's your guy. Email him, engineers. You will love him forever. Corey Rosenblum, he's our resident senior strategist, and he's our swing trader. So we hired a full-time swing trader here. Corey also has a CMT. I've known Corey for, probably over 15 years. Met him years and years ago, but phenomenal on an intraday basis. You learn a lot from Corey. Okay, swing trading, holding positions, using things like in-out spreads. You'll love it. Next in the docket, Brandon Chapman. He's our CMT, another CMT. By the way, we have 3 CMTs on staff. If you guys know about that designation, it's incredibly difficult to get. Brandon Chapman, Corey Rosenblum, and Jeff Bierman all have CMT. Okay. Brandon Chapman's macroeconomics, technicals, and fundamentals. Brandon also does come from a background of Thinkorswim and TD Ameritrade. In fact, Brandon wrote a lot of the course manuals at TD Ameritrade for their education. Some of you may remember this, okay, and some of you may not, but there was a course TD Ameritrade used to have, and the course costs $24,000 for 18 months. It was $24,000 for 18 months. Brandon Chapman actually wrote the course manual for it, and he'll be the first one to tell you what we do here at TheoTrade for a few $100, absolutely blow away. Steve Miller. Steve's actually now, was actually up to 45-year veteran stock options and futures trader. Steve Miller is also our in-house psychologist. I'll talk about his classes in a second. Tony Rago, that's who was live a moment ago. He just trades NASDAQ futures throughout the course of the day, provides setups. You guys will love, like, hardcore intraday strategists. Okay, Tony has got a huge following here at TheoTrade. Last but definitely not least, Blake Young. We actually just recently brought on Blake Young. He's about 7 months new. I've also known Blake Young from both Thinkorswim and TD Ameritrade. Market profile, futures, currency, and commodity trader. This is actually what the crew looks like. It's scary, right? We're all working from home, but Jeff Bierman with his headset up there. Look, I'm in the same spot. Anyway, that's our crew here at TheoTrade. In addition to this, we also provide you 59 proprietary indicators and scans. Today, I'm actually going to give you access to the auto expected move, but we have S&P gravity points, TheoTrade, RSI, Laguerre, Quantix, NQ levels, next generation squeeze indicator. There's complex position trackers, IV rank versus percentile, TheoQuant, unusual put options activity. Basically every script that we've ever written, okay, we give you. Okay, it's yours today. And it's like another, what, $1,800 in indicators and scans, right? The fourth bonus, you're also going to see the TheoTheta live portfolio. As I said, you can see everything I'm doing. That's the portfolio that I've been, bringing up over here. I mean, it's up like $1,000 today, but in this portfolio, it's a new positive theta portfolio. It's Ultima premium selling. It's no holds barred. No holds barred. You can see everything we do. Period. Full disclosure on all trades, opening, closing, hedging positions. You're going to watch myself, Don Kaufman, trade. Like, again, it's completely uninhibited. I'm going to do whatever I want, whatever I need to be able to mitigate risk. And we actually put those into the portfolio. We also now have TheoTheta small account. TheoTheta small account was literally only launched last week. That is a smaller version for people that have $2,000, $5,000 accounts that can't necessarily do some of the more wild trades. It's okay. Like, we're catering to that now. By the way, this is what the TheoTheta portfolio looks like. I literally just copy and paste the trades. We don't have to get cute, doesn't have to get pretty. Copy and paste the trade, copy and paste the trade. Sold a strangle, sold the QQQ. Okay, sold. Then we actually can click on close trades. This is all available inside of the site. In addition to that, I know you can't watch all day. Like, I get it. This stuff, it comes. There's constantly trading. Oh, my head's gonna explode. Okay, right here. This is actually a weekly update. We do it every Friday. It's only about a 10 to 15 minute update. We update everything that we're doing. Nothing I'm doing in this TheoTheta is all about timing. I'm just selling out of the money premium, getting back, kind of duck and cover, mitigate some risk. You can follow this stuff. This is all part of the fourth bonus on there on TheoTheta. It's phenomenal. And again, we record this video on a Friday morning, send it out to you so that you can kind of recap everything I've done through the week, catch up a little bit on a Friday. Number 5, technical analysis toolkit. I'm not a chart guy. I'm never going to be a chart guy. I live actually here in St. Croix next to the chart guy. I ain't never going to be a chart guy. Okay. Technical analysis 101, technical analysis 201, MACD indicators, time-based trading systems, pattern recognition, and 21 other technical analysis classes. Okay. A lot of this comes from Professor Jeff Bierman. Okay. And again, it's just part of TheoTrade, and it's just getting used to, like, man, you guys have a lot of stuff here. Listen, okay, I get it, but here's some of the technical analysis classes, and I'm just going to click in here and show you RSI, okay, fractal energy, oscillators class, guide to time-based trading systems, price retracements, just Fibonacci's, right? DMI class, MACD, the power of linear regression, market profile class. Okay, telling you name a genre of trade, it's in here. That's bonus number 5. Bonus number 6, we actually give you full access to all the day trading courses. Intraday trading with NASDAQ futures, day trading ES futures blueprint, consistent intraday strategies and setups, high probability intraday trading systems. And again, there's 11 other day trading classes. Okay, then we actually come, okay, to more mindset. I'll tell you right now, right? The 5 essential building blocks to successful trading. That's actually Slim Miller's class. It'll change your whole life. You got to watch this class. It's phenomenal. I mean, that class, you pay $1,000 alone for that one class. Okay. The top 10 common trading mistakes. And then again, we have another class on building a trading plan. These 3 classes, this stuff is essential stuff if you're going to be involved in this business. Okay. Okay. Number 8, quick start guide to Ultimate Trades. We actually put together for Ultimate Trades specifically a PDF file to get you going. It's like a Cliff Notes version of what you need to do here. Listen, what our members are saying, this comes from Ken, says, woohoo, thank you, Dom. Never sure of what trades are new to me that I structure myself. This is great to hear. Not to brag, but this is due to you and your magnificent team. I'm up over 1.67 million in profit. By the way, this is back in August last year, but I've known Ken. Ken trains with a larger account. This is actually a lot of premium selling stuff. So that's why I actually included this one. Anyway, I figured I would throw that in there. Listen, TheoTrade includes everything you need to invest, trade. We have classes, coaching, email access to the instructors, live trading rooms and live trades and live feeds on those trades, indicators and scans. There's mobile access. It's everything that you're going to need. I mean, literally, we have set out to build the Netflix for traders. Everything you need today, it's $297 for 3 months. Okay. Want to make something abundantly clear. Again, go to theotrade.com/SKU. Yes, there's a money back guarantee. I'll show it again in a second. It's $297 for 3 months. And I want to reiterate something in here because it's probably like the most critical aspect of this. This $297 for 3 months. Immediately, everybody goes, what happens after 3 months? You pay $297 if you want to do it again. That's how we have 6,000 members. Wait a second, is it a membership? This is not a membership. We don't do memberships. We don't like memberships. You ever tried to get out of a gym membership? You have to give blood to get out of a gym membership. I can't stand it, okay? I can't stand gym membership so much that, and I'm not joking, I literally built a gym, okay? Both in this house and in the house in Arizona, because I'm completely nuts, okay? Because I hate memberships, hate it. And that is something that you can like feel, touch, taste here at TheoTrade. We don't do memberships. You want to do this, it's $297. You want to do it again in 3 months, it's $297. And I'm even going to hit you with something in a second. You don't even have to pay the full $297, okay? I'll show you that in a second. This includes Ultimate Income Generator. That's available immediately. All of it's available immediately. You can hop on, you sign up now, you go into the chat room, you're live right now. Okay. Yeah, there's only like an hour and 10 minutes left in the trading day, but that's fine. You're going to get access to over 100 trading classes, all available immediately on demand. You can even download them. We do new monthly classes. I didn't even mention that. When new classes come, and they constantly come, listen, we already have 100 classes. How do you think we did that in about 6 years? Just keep chugging along. There's 8 full-time instructors. There's new monthly classes. There's a live trading room where we provide real-time trade ideas. We broadcast about 6.5 hours, the full trading session. Indicators, we give them to you. Text and push notification, we give it to you, right? Again, if you can't get text messages because you're in Canada, or you can't get text messages because you're in Singapore or Australia, fine. Download our app. We do push notification. We have daily coaching sessions taught by a professor of finance at DePaul University. He's $42,000 a year at DePaul, or you get him here at TheoTrade for $297. Instructors also directly answer your questions via email. Again, it's theotrade.com/SKU. I just want to be clear on something. SKU, it's S as in Sam, K as in kick, E as in echo, W. So it's theotrade.com/SKU. I'm going to reiterate this. Totally riskless trade. There's no stipulations at all. Listen, sign up today, okay? I get it. If it's not for you, I'm still going to love you. Just email support@theotrade.com. The single most important thing to us here is that if it isn't for you, you got to let us know, okay? But we want you to leave. And if you are going to leave, we want you to leave happy. And we want you to be able to leave happy, and it's a full refund. We don't do like any prorated garbage like that. And you still get to watch some of the classes, and you're going to see this stuff's worth it. Okay. It's worth it. And the reason that people stay here and the reason we have 6,000 members, because we're always on the bleeding edge of this business. We're always providing trade ideas. Okay. Again, if you're not thrilled, okay, you also get to keep bonus 1, which is the access to options 101, options 201. You still get to keep the introductory classes on us. Get into TheoTrade now. We're going to work with you directly. There are 50 spots on the TheoTrade riskless deal. And we do that, okay, strictly because we answer emails on a one-to-one basis. So we have, almost 1,000 people on today, and these 50 spots will fill up like almost instantaneously. There's 50 spots on the riskless deal. And again, we only do that simply because we want to incentivize you, to enroll today. But there's also, it's a matter of emailing back and forth. So there are 8 of us and there's 1,000 of you. And like, we get it. We spend 4 or 5 hours a day each answering emails, but we give unlimited email mentoring. That's why we give 50 spots. Send us your trades as well. Send us your trades. You can say, hey, am I doing this trade right? I know a lot of people like in a lot of education, like, I can't answer that. Listen to me. I can answer that. I've had a series 3. I've had a series 4. I've had a series 7. I've had my series 24. I've had my series 66. You want fries with that? No, it doesn't make a difference. We know how to answer trade related questions. The $297 riskless offer, it's never been available, okay, with Ultima income generator class plus the TheoTrade portfolio. And again, it's no stipulations, money back guarantee. Listen, this is what you get today. Ultimate income generator course, bonus 1, starter's guide, bonus 2, 100 classes, bonus 3, okay? That is literally full membership to all of our trading. And I'll show you what the trading room looks like here momentarily. I brought this up a second ago, but look, this is everybody, okay? The highlighted people like this, highlighted people, that's Corey Rosenblum. So anybody that's highlighted in here, okay? Oh, Matt Williamson apparently is saying hi. Anybody that's highlighted in here is one of the instructors. And again, up top over here, this is actually where the instructor is broadcasting live. Corey's actually getting ready to go live. He's in the wings. He's waiting in the wings. He's 2 minutes away from going live, okay? But that's what TheoTrade looks like. So then we actually give you the TheoTheta live portfolio, okay? The technical analysis toolkit, day trading, okay, classes, all the mindset classes, and the quick start guide to Ultima. It's a PDF file that we created just to get started for this. Listen, what our members are saying. This one I threw in here again, specifically, comes from Steve. Your organization continues to blow me away with its insights, expertise, resources, personalities, and structure. I've learned so much and have been able to apply the knowledge to improve my trading exponentially. Thank you, and thanks to all your staff for everything. I'm grateful I found TheoTrade and had a sense to choose your organization as my mentor, okay, over all the other players in the marketplace, okay? And now that you've added Blake Young, whose style I enjoy immensely, okay, I'm starting to adopt. Don't know what else to say, but TheoTrade's awesome. Very satisfied customer. It's Steve in Southern California. Follow me over to this address really quick, theotrade.com/SKU. You can also get the link over here. And the reason I'm bringing this up, let me detail something here momentarily. This is the Ulta Income Generator class, right? It's on demand. Everything that you receive in here. But the reason that I want to take you on this is, first of all, if you need anything right now, questions, you can go directly into the chat. Okay, and I'm actually going to grab a ton of the questions here and try to answer those live for you. Okay, make sure we have questions coming in. Okay, so the Ultimate Income Generator class, there are 50 riskless spots. Again, 50 riskless spots over here, and there's a new TheoTrade portfolio. Obviously, get part of that. The reason I'm bringing this up, again, this is theotrade.com/SKU. When you click add to cart, I just want to take you through 2 different things on here. When you click add to cart, in your billing information, okay, right down here where it says phone number, okay, sure. I just filled, sorry, I just scared somebody to death. I'm sorry. I just filled on a trade over in another account. That's the Tastyworks account. Put your phone number in here. This, okay, will enroll you for text messages. Listen, there's not going to be a million text messages. We're actually, we send out a couple texts here and there, kind of get you ramped up over time. So we're not going to start firing text messages in the middle of the night. But I wanted to show you that the other aspect that's worth noting in here, this is not a membership. Listen, you can select your payment type, $300, $149, or $100. Okay. It is what it is. We just do it that way because, again, we want people to understand there's a money back guarantee on there anyway. So, it is what it is over here. We're fine with whatever you guys select, but I wanted to take you into detail over there. The other aspect is when you go here to theotrade.com/SKU, if you scroll down, obviously this lists everything on our site. If you scroll down, this is the auto expected move indicator. While you're enrolling for this, you don't have to download this. This is on our site. Don't even worry about downloading it, okay? But for all the rest of you, you click add to cart, go through the order entry. You're good to go. If you have questions thereafter, just hit us at support@theotrade.com. Okay. And again, we're in here answering questions live right now, but I'm actually going to get to a bunch of the questions as we do go in here. Again, somebody just asked a question. Again, it's theotrade.com/S is in Sam, K is in kick, E is in echo, W. Okay. So theotrade.com/SKU. I'll show you a few things. So again, this is the chat room. Okay. The start here menu, the TheoTheta portfolio. You can see all of the trades, both opening, okay, and closing positions. So you can see I've even closed a position literally today inside of the QQQ, opening positions in here. Then we actually come technical analysis classes, okay, and on and on. I mean, everything that's listed in TheoTrade, you'll see all the different portfolios, the in-out spread, okay, duration portfolio, archives, everything from classes, Corey's Corner, okay, different resources for you. I mean, we try to include everything for you. Now, I'm going to answer some very general questions here, okay, and then we'll get to some specifics. By the way, this comes from Todd Summerall. I just wanted to tell you this one. The reason I included this particular email in here is to say like, hey, listen, we will answer trade related questions. Todd said, I don't know if you remember, but I emailed you a few weeks ago and told you my delta was positive a couple thousand or more. You told me to smash it or I was going to be in trouble. I smashed it. You saved my account. Just want to thank you. Before TheoTrade, I had no clue about portfolio delta. And again, the reason that I include this particular like email in there is just to show you like, listen, big hearty thanks to you and all of your team. My finances would have been a goner without your advice. We don't shy away from answering direct trade related questions on email. So here's a little bit of Q&A. And again, I'm reading inside of the chat room as well. The other thing I am going to try to do for you, and I'll make sure that we're on the same page here. The other thing I'm going to try to do for you, there are 50 riskless spots that are available. Again, there are 50 riskless spots available. They fill up extremely quickly. I will be more than happy to read off the names, okay, of the 50 individuals that get obviously the riskless spots. And that is just the money back guarantee. We do it for 50 people, and we do it for 50 people, obviously, to incentivize you. We only do it for 50 people because think about the number of emails that come into us. It is a phenomenal number of emails that we receive, which is fine. Okay. All right. First of all, general questions, then we're going to get to some specific questions in here. You ready? What do you need to get started? You need a laptop, internet connection. Like if you just have like an iPad though, it's fine. I mean, most of the time, and again, I'm trying to grab my phone over here. Most of the time, okay, people trade off of one of these little guys over here, which is also, okay, that's par for the course. So it's absolutely par for the course. If you want to trade off of your phone and even stream, okay, we have an app specifically for TheoTrade. And you can watch all the courses on here. Maybe some type of tablet might be a little bit better, but you don't even need a laptop these days anymore. Next, this is not a membership. We're not going to we don't do auto renew. We don't do auto bill. We do not do that here at TheoTrade. I know that sounds weird, but listen, we want people to be happy. And generally speaking, people aren't happy when you keep hitting them with $100 a month charges. So you decide when you want to get in, when you want to get out. Okay. All right. Onward and upward from there. We're now providing a TheoTheta weekly video update, so you can follow all the moves that we make. And when I say TheoTheta weekly update, it's on the site. Okay. You just come in here and you go under like portfolios. Okay, there's a TheoTheta small portfolio, regular TheoTheta portfolio, but this is Infinity Trader and TheoTheta. And what that happens to be, there's a lot of things that say TheoTheta. Okay, these are the weekly videos. Every Friday we will record. Okay, every Friday we record. And you're like, what does that look like? Right? Stan Kaufman here, March 5th, 2021, doing the Theo, and you just get a quick feel for what that obviously looks like. Like I literally, take you through verbatim all the positions that I've done, all the positions I've taken off. Okay. Number 4 over here, TheoTrade archives everything. We understand not everybody can watch all day. So in each trading session. So for the most part, as I said, we absolutely, archive every nuance of everything that we do in here, which is important to us. By the way, you can also replay it on TheoTrade mobile, and you can speed it up. You can watch it at like 1.5 times, 2 times the speed over there. So that's also par for the course. All right. We provide you access to TheoTrade Mobile. You can download that literally right after signing up for TheoTrade. Download TheoTrade Mobile, watch some of the archives over there. Add your cell phone number, as I already said, when enrolling to receive trades via text message, or download, again, TheoTrade Mobile for push notification. All right, next. You can email us anytime. You're going to receive a response within 24 hours. Hey, listen, the only time that I ever do that, the only time I ever do that is when I say 24 hours, is simply we put that in there because somebody will email us with 5 minutes to go to the close on a Friday afternoon. They're like, help me. You're like, you're killing me, man. There's 5 minutes to go to the close. I can't get a hold of my brokerage firm. Give us time. Okay, give us a little time. We want to be able to answer the questions. We do have to have a little bit of turnaround time. Some of the stuff that we even do now, an email, we don't even email you. We actually record you like little videos. So we do that all the time now. Okay. Again, you're going to gain access to everything that we have done. Okay, in the previous 5 years, including classes, coaching, live trading sessions. All the archives are searchable. Okay, all the archives are searchable. Name a trading topic, and you can actually, when I say you can search, we have a search engine built here. All right, we literally built under member home. There's a search engine. So type in anything you want in here. Okay, like spreads, back spreads. Oh, let's do back spreads. Do is back spreads. Pull up a quick search. Every single topic involving back spreads, bullish back ratios. Okay, you name it. Every single thing's big bond traders are back. Anyway, every single thing that mentions like back spreads is going to come up, or where there's back spread trades is going to actually pull in the archive. All right, moving along over here. Again, we have archives on literally 6 years of archives, variations of the trades available inside of an IRA or retirement account. You could do this with as little as $2,000 within that account. Okay, we at TheoTrade, we can help you get approved for options at several major broker dealers. This is a question that comes up just continuously. All right. And the continuous question is, I can't do this with my brokerage firm. They won't let me do this. Won't let me do this. We got you. Okay. We have brokerage firms that work with us. Obviously, we have relationships with TD Ameritrade, which is now Charles Schwab. We have relationships with Tastyworks. Okay. Those are the two primary brokerage firms we absolutely work with. And we do, play a little bit of favorites because some of them allow you to do a little bit more than other firms over there. Listen, there are 50 riskless trade spots available. It takes me about 5 minutes. After you enroll, it takes me about 5 minutes to actually see your name. I'll read off a couple of the names. Listen, get results, take action, enroll for TheoTrade now because there's no risk to you. And again, I just wanted to detail. Once again, I'll go back over here and pop this up. But here, go right to the site. Again, it's TheoTrade, theotrade.com/Q. And I'll leave this in place right now. There's the first batch of names that are coming through, and I'm also going to answer some of the individual questions that have actually arisen inside of the chat. So just hang with me here for just a moment. Lawrence H. from Florida, Brian V. from Michigan, Jonathan A. from California, William H. from Georgia, William K. from Iowa, Greg W. from Missouri, Richard P. from Texas, Paul W. from New York. Again, all I'm doing here real quick is just reading off a couple of the names that are kind of first coming through here. Again, there's 50 riskless spots. Bruce M. from Canada, Anesh S. from Illinois, Kevin K. from Illinois. Again, it takes me about 5 minutes to see this. Let me start to answer some of the questions. And again, there's a ton of names, so I apologize. I'm going to come back to those here momentarily. All right. Oh, somebody asked, how did this portfolio do in March of 2020? Due to the did margin increase because of the down move? Okay, so the down move inside of March 2020, I'll actually show you some specific trades in here from March 2020. If you're so inclined to kind of be a little bit curious about that, which is fine. Some of our hedges actually went off huge at that particular time frame. You know what? Normally I can only pull 300. Whoops, I apologize. Normally I can only pull 360 days. That actually might be enough because we're already into March, and I'm going to pull up the XLU, and I apologize because I have to check which account I did some of these trades in. So bear with me. Some of the trades may have actually been in my IRA because I'm going to show you what a hedge looks like. And yeah, here they are. Okay, here they actually are. So this is what a hedge looks like. Okay, where I'm actually closing a trade for a sell to close. This is a sell to close for a $21 credit. And what basically occurred is the hedges, they worked. The hedges worked, and they worked absolutely huge. And I can tell you exactly where some of my hedges happen to be. Okay. And these, again, this is trade history. And I'm showing you literally the trade history back here, like on March 16th of 2020, closing options for $21, closing options for $23. These trades, okay. And again, I can only pull 360 days of history without getting a little bit more funky on you. So I'm just showing you about 360 days back. Okay. These are the trades that went off in a huge, huge way. So there are some really, really big trades that are in here. And again, many of these are types of hedges. Okay. And again, there's some huge credits that are obviously in here. There's back ratio spreads. So if you're kind of curious about that, the hedges worked incredibly well. And I'm happy to share some of the hedges with you guys. In fact, you'll see some of the hedges as you actually go through the class specific to March of 2020, because the puts that you sell, of course, would get killed. The hedges have to explode in value. And that's exactly unequivocally what happened. In fact, I know another one that went off really big, and that's actually in the VIX. So here's another hedge if you're kind of curious. Okay. Might be in the other account. I apologize. I trade between accounts. Okay. Trading between multiple accounts in here. I'd have to dig this one out completely. This may actually be more than 360 days though. So the hedges though pick up the pieces when the volatility is rocking. And it's the key to survival, people, in this business. And to understand survival in this business, the key to it obviously is the risk reduction, metric in there. Sorry, I'm still reading off a couple of names over here. So bear with me here momentarily as I go back into this. I think we already got, all right, we're down to Paul L. from Virginia, Brad R. from Washington, Larry B. from Alabama, John H. from Georgia, Alan P. from West Virginia, Robert J. from Florida, Greg from Washington, Keith H. from Florida, Thomas M. from Washington, Chuck M. from California, Robert O. from Texas, David R. from Louisiana, David M. from Michigan, John B. from Arizona, Ronald S. from Texas, Vic P. from California, Stephen L. from Pennsylvania, Chuck K. from Georgia, Austin L. from Oklahoma, Gerald G. from Texas, Robert L. from New York. Okay. I'm going to butcher this name and I apologize right now. Swapnil P from New Jersey. Please let me know if I got that right. So I'm going to say Swapnil from P from Jersey, Stephen P from Florida, Robert P from Oklahoma. I think I already got you earlier. Maybe no. Okay. Mark E from Colorado, Rodney S from Pennsylvania, Alexandra R from California, Kyle L from New York, and Paul C from Ohio. Oof. Reading off names as fast as I can. Okay, back to some of the questions in here. So sorry, I'm trying to go back and forth. As I said, it takes about a 5-minute delay before I can see some of the names that come through. But people, I think we're probably at about, just guessing at a glance, probably at about 38 or 39 out of the 50 that have already enrolled. Okay, so again, I know I've got a lot of questions in the queue. I'm actually going to try to hammer these questions out. By the way, Brian actually asked, and I'm just gonna go for this, Brian. Said, can you explain why you got out of the trades? You get out of the trades and get out of them profitably for X amount. You saw me get out for a very consistent amount. You never want to carry the trades past a certain date, because what basically happens is you actually burn options premium. Okay, the worst trade you're ever going to make in your life. Here's the worst trade you're ever going to make in your life. You take an option from 100 days. Just watch for a second. Here's an option at 100 days. Okay, you burn 50% of the premium in 30 days. Do you want to carry that option for the next 70 days just to burn another 50%? It ain't worth it. Or you just bail and go for it again. You want to burn the easy part. Okay, like in this business, you got to think of it like you're squeezing juice out of a orange. Okay, if you've ever actually made your own orange juice, you're squeezing that thing and you're like, oh man, that ain't that bad. And then that last like 50%, you're like, holy crap, and the juice maker breaks. Okay, same thing. Basically, here's the other answer. Negative gamma risk increases exponentially greater with 23 days or less to go to expiration, and you will blow yourself up in the last 23 days of an expiration. Ask anybody that sold options premium, it happens to them. The last 23 days of options expiration is pure gamma risk. Okay, the gamma risk goes exponential, okay, and the theta can't cover it. All right. How do you determine which ticker, okay, and how do you determine when to sell? The when to sell is always that one's always like a little bit like, it's out there, right? Okay. So there's a couple of details. To determine which ticker is actually simple. If I told you for the rest of your life, okay, you could actually trade spiders, you could trade IWM, you could trade the QQQ, and I'm dead serious. For the rest of your life, just trade those three products. But the hedges may have to go elsewhere. The hedges, you saw me like hedging in the XLU. Why did I hedge in the XLU? It's cheap hedge. I hedged in the HYG too, which is junk bonds. I hedge all the time in junk bonds. Okay. Why do I hedge in junk bonds? Okay. Because it works. Go look at my account. If you look at like HYG, you'll see all these hedges in the HYG. Okay. I'll just go out there and I'll just buy stuff in the HYG and buy it and buy it and buy it. Okay. And the HYG doesn't make a lot of money until it makes an absolute grand slam home run. Okay, so I'm always using things like, look, you can see some big credits in here too. The HYG, look, there's some of the closing trades. Look at this, $14 in the HYG back on March of 16. That's a hedge, people. $14. The HYG doesn't usually move but like 30 cents a day. I took $14 out of that thing in March. So by the way, I love the question that came in over there. So determining the ticker symbol is actually pretty straightforward. Determining when to sell is a pure function of volatility and what your aggregate risk is. Okay, so bear with me. I'm going to come back to that in just a second. So more names. Albert P. from Vermont. Jeannie S. from Florida. Did I get that right? Or sorry, is it Jean or Jeannie? I apologize. Tim T. from Georgia. Jeffrey B. from Connecticut. Smiley S. from California. Kirk F. from Arizona. Ed H. from South Carolina. Jonathan F. from California. All right, back to the questions. Okay, I'm doing the best I can, running through some of the questions. Okay. By the way, can't the market run through one side or the other? And absolutely, if the market does run higher or lower. In fact, here, you want to see something really interesting? Somebody said, I want to see some losing trades. I'll show you some losing trades. Okay. Let's actually come in here. Let's knock down the number of days because I know I had a losing trade in the IWM. Seriously, there's 90% trades. Okay, 90% trades. Let's go into the IWM. Let's go into the IWM. Let's actually go to my PM account. Okay, and in the IWM, you can see all of these, look, to close, to close, to close. Okay, there's a couple of like gamma irons. By the way, this is a gamma iron. That is a hedge. I want you to see, this is the opening of the hedge. This is the closing of the hedge. The hedge lost. I bought it for 234. I sold it for 226. It's a buy-side iron condor to actually reduce risk of what you're selling. Okay, buy-side iron condor to reduce risk. Technically, it's a loss. Okay, sometimes hedges though are sacrificial lambs. That's okay. But at the exact same time that I closed that, there's an option in here. I know I closed it. It's right there. See that one for 212? That is a 235 call. I'm serious. I will show you every single trade in here. I sold that call, okay, right here. This is the buy to close for 212. I think I sold that option. It's the 235 call from March of 2019. Look, I actually opened it. Okay. I think I opened it 235 call. Where is it? Where is it? Where is it? There's a 235 call somewhere in here. Okay. Anyway, I know that I took a very mild loss on that particular option. And lo and behold, I think I actually sold that one maybe more than 60 days back. I apologize. I'll show it to you because I think it's important you see this. Look, here, I sold it for 94 cents right there. Sold it for 94 cents, okay? And I did in fact buy it back for $1.12. So what did I take on it? Took a few penny loss, but the hedge reduced my risk on it. So somebody said, show me some losing trades. I showed you a losing trade. I'll show you every single trade. You look at the QQQ, okay? And you go look at the entire portfolio because it's on the site. That's of the naked premium sales, that's the only loser. And the reason that I'm bringing up the IWM did nothing but go straight up. I did nothing but sell out of the money calls, and I'm still alive to tell the story. It's good hedge. was a really good hedge on that particular one. All right. Okay. Oh, somebody said actually, Smiley said, why 435 call on the 300 put? So the 435 call on the 300 put actually had everything to do with delta. So we actually will fine tune into a delta. The reason we have to get you to a specific delta, the delta is all about skew. If I know that you're at the right delta, you're basically right in the inflection of where the curve is. Anyway, with skew today, that's why, the link over here is theotrade.com/skew, because skew is, lo and behold, that's the most important thing that we do here. Okay, and teaching that one. Yeah, the enrollment is definitely for 3 months. The enrollment's for 3 months. By the way, I'm just jumping back over here. I think I got most of the names answered right now. Okay, moving on over here. Oh, somebody said, what do the hedge funds do to get in trouble in GameStop? Okay, how to limit the upside risk. Okay, what hedge funds actually did in GameStop is a vastly different thing. They shorted outright stock. Okay, the other thing is this: there is a definitive piece of criteria that is in this class that would never allow you to get anywhere near something like a GameStop ever. Okay, and nothing like a GameStop could have ever happened because it has to do with the magnitude or the product you're trading. If you noticed, in every single stock, I'm going to make this really, really clear. In every single stock that I traded, okay, there's no explosive capability per se to the upside outside of Tesla. And Tesla only fit the criteria for a very minimal period of time. Almost everything I traded can't be taken over. It can't explode. Like we looked at the IWM, the QQQ, and the spiders. There can never be a GameStop if you actually follow the criteria in here, which is critical. I don't mind saying that because I want you to know that it's actually in the first 3 steps of criteria. It walks you through, and you'll understand when you see the criteria in there. Okay. Auto expected move looks accurate. Okay, it's a combination of the call and put options. Okay, so the auto expected move. If you're curious about auto expected move, what the auto expected move is, okay, it's the expected move from Thinkorswim taken on a Friday afternoon, extrapolated for the following Friday. So what we basically do is we say expected move, okay, is the option markets. It's averaging all the options in the chain, and it says $10, for instance, and I'm just highlighting something for a second here. It says right there, $10.09. The implication here is that over the next 10 days that the IWM, okay, is supposed to move up $10 or down $10. And all we basically do is take that, and if the option market says the market's supposed to move $10, the market's probably going to move $10 higher or lower. That's like a given, because look, on a week-to-week basis, this is just extrapolating on a week-to-week basis. Look at this. We're on the edge of the expected move. This is the IWM. Okay. Last week, we hit the upper edge and hit the lower edge. The week before that, we rode the lower edge. The week before that, rode the lower edge. The week after, before that, we rode the upper edge. There's a breach. A breach. What does that mean? It means we actually ripped through. It's efficiency and inefficiency. You guys will be blown away, though, by expected move. I use it every single day. You'll see me use it on TheoTrade. Literally, like every single day we talk about it here at TheoTrade. All right. There are 3 spots. By the way, 3 spots left. Just reading off a couple more names. Andrew K. from Connecticut, Eliza B. from Texas. And again, I know I'm running like way long over here. I just want to make sure that I get everybody's name. Okay, with a small account, how do you choose which equities to use? In the there's 2 hours based on the small account portion of it. What we're basically going to do is we're going to get you into more product that doesn't tie up margin. Okay, I'll explain that at a different time because you're going to see it literally tomorrow. You will see me trade these products. Okay. S. Schmidt actually said, can you show us scans of how you choose which trades? Actually, there's no scans. There's literally no scans. All you have to basically do is know the product. Like, IWM. I'm telling you right now, IWM is a candidate. I have positions. Okay, I got positions right now inside of IWM. Okay? There's a couple positions here, a couple in ZB. Right, so you're getting an idea really quick. But the bottom line is, right, you don't need to scan for this. This is actually much easier than that. Don't make it more difficult than it has to be. It's more about building inventory. We're going to get you into the inventory management business. You're going to play hot potato. You're going to sell some stuff 100 days out. Comes to, short amount of time, you're going to rip it off, make your money, move on, rip you off, move on, rip it off, move on. You're just going to constantly kind of recycle that, right? Look at it every couple of days. Most of the time, it's like watching paint dry. Things just decay, you leave them alone. Okay, get a couple of intense days here and there, but you're hedged for those, and that's what's so critical in this portion of the business. So, by the way, Scott actually asked, is volume and the spread open interest, okay, important to you? And the answer is absolutely, unequivocally yes. In the second step of criteria, literally step number 2 of the criteria, okay? I have like 5 different slides in the class that I'm like, if you don't pay attention to liquidity, you're already dead. I mean, I literally verbatim say that. Then I talk a little bit about stuff like if you trade the SPX, when you don't know what you're doing, you're going to die, yada, yada, yada. We lead you right to the products you should be led to. You will see that. Absolutely. So Scott, that's important. Liquidity, liquidity, liquidity. Okay, I think we got most of the questions answered over here. And I want to make sure, by the way, thank you, Robert. Um, okay, somebody said, how does one control risk by selling options and effectively use margin? So when you're actually controlling risk, you're not going to be on the sell side of options. What you're actually going to do is you're going to use what we call outlier trades to mitigate risk. Some of the outlier trades can actually be done in the VIX. We use what's called the VIX volatility spread. And for the most part, if the marketplace crashes, you realize you're selling way out of the money options. And I promise this is the last question we're going to answer, and then we're going to kind of wrap things up, and I'll try to answer some of these offline, but we're going to be selling way out of the money options. Market crashes. The VIX explodes higher, and I buy this little outlier trade. Okay, I pay, like, for instance, $1 in the VIX, and my dollar in the VIX becomes worth 15. And basically, the VIX trade is offsetting. The key, though, is which VIX trade to use, how far out to go, and how to actually get the VIX trades at low enough a cost. And that's what hedging is really about. The juice of the hedge has to be worth the squeeze. And that's literally what we do inside of the class, kind of allude to. So with that, I want to thank everybody for joining us this afternoon. I apologize, I ran way over today. And hey, please hop into the chat room tomorrow morning. First thing, I'm on every morning. So I'm first one up pretty much when the bell goes off. I start 10 minutes before the bell. So if you're Pacific time, that's 6:20 Pacific time, 9:20 Eastern time. And hey, if you're ever in the island of St. Croix,